Hello and good morning, everyone. My name is Jackson Kimani. I would describe myself as an active cryptocurrency enthusiast and investor. I've been in this cryptocurrency space since its early infancies, back from 2014, 2015 until now. So I have seen it all. I have done it all in the crypto space for over 5 years. I'll be available today to take you through this Crypto 101 Masterclass and to learn about how all the digital currencies and cryptocurrencies, how they work, why they're relevant, and why you would enjoy to invest in them or to just learn about the new technology. So that is a brief history about myself. And side note is I do have a day job, but cryptocurrency is full-time. I do this full-time and 24/7. I'm always on Crypto Watch. So nothing ever misses me out. And during this class, I would also like to comment that Robert failed to mention, but I was one of the original day one class members of Abojani. So in the first Abojani class, I was also one of the students there. So I'm also a pioneer of Abojani, and I will foster all the Abojani principles relating to cryptocurrencies as well. So feel safe, feel at home. I'm also one of the students as you guys, and we can all learn together. So that's a brief introduction about me. And should you have any question, please, you can raise your hand, or you can just type it in, or you can also speak. Robert, so do we have everyone on board to begin?
Yeah, sure, we can begin. And thank you for mentioning that. I remember that very first Abojani Masterclass in November 2018. Yes. Yeah, so yes. Big up for that. Yeah.
You're welcome. Right. So do people have their mics open to speak?
Let me check. I think maybe they can raise their hands.
Oh, they can raise their hands.
Yeah, there's also a Q&A panel, and we also have the chat area.
All right, sure. So should anyone have any question, I think as Robert has mentioned, you can just type it in and I will see, and we will tackle the question there and then, because I like the session to be as interactive as possible. So today on our lesson 1 here, we're going to explore how cryptocurrencies and digital currencies work. So the first question maybe you would ask yourself is, what is a cryptocurrency? And for me personally, I would describe a cryptocurrency as a form of digital asset based on a network that is distributed across a large number of computers. This decentralized structure allows them to exist outside the control of any third parties or central authorities like governments. So for people who are wondering how this can happen, it's basically a network that was created, and this network is hosted on a large number of computers that is not owned by one single entity. That is basically what this explanation here is trying to outline. I will read that once more. It says that cryptocurrency is a form of digital asset based on a network that is distributed across a large number of computers. So this large number of computers could be anywhere and anyone. This is the beauty of cryptocurrency. The Bitcoin network is not hosted on one single computer. It is hosted on many single computers, hosted by many people across the globe. So it is not owned by one single individual. This is why the second statement here comes in to say this decentralized structure allows them to exist outside the control of any third parties or central authorities like governments. We would liken that to what is currently happening with banks. All banks have all their system in a centralized location, but otherwise cryptocurrencies like Bitcoin do not have their system in a central location. Otherwise, they're distributed across a large network of computers hosted by individual people and companies, therefore making it decentralized and not owned by one single person. So the word cryptocurrency, for those who might not be familiar with it, is actually derived from two words. The first one is cryptography, and the second one is currency. This is simply because cryptocurrency extensively uses cryptographic techniques to secure transactions between users. So cryptographic techniques are basically techniques they're basically, I would just, in plain simple language, I would call them coding techniques. Kind of like back in the World War II, or I don't know, I'm not sure if it's World War I or II, when the Germans were always trying to send messages among themselves that they did not want the enemy armies to learn about. They used to use cryptographic techniques to encode these messages and decode these messages on the other side once they're sent. This way the enemy will not learn what they're trying to communicate. And I mean, a lot of countries tried to break those codes, and it took a very long time and a lot of tedious processes. So we have a field in computer science called cryptography. So basically, cryptocurrency uses a lot of cryptography techniques and technologies to be able to secure transactions on the blockchain. So this is where the word cryptocurrency is derived from the two words cryptography and currency. So that is a brief introduction about what is cryptocurrency and where is the word exactly derived from. So cryptography techniques are just techniques that enhance security of a system. That is basically what in computer science we learn about when it comes to cryptographic techniques, is how do you make the system that you're trying to build more secure? How do you send data and receive data in a more secure way? How do you encode and decode information in a more secure way? So those are just some of the cryptocurrency, cryptography techniques that are learned in cryptography. So if anyone has a question about cryptocurrency and its definition, you can definitely ask and you shall be answered. The next one we shall look at B here. We shall explore the value of Bitcoin continuously developed over this lesson. So I think everyone knows by now about Bitcoin or have heard about Bitcoin, which is currently the largest cryptocurrency by market capitalization, as we can see here. Let me just open this page. So this is kind of like the Nairobi Stock Exchange for cryptocurrencies. This is where all the largest cryptocurrencies are listed. And this is a platform that you shall actively be using to check out any cryptocurrencies that you will basically need to have any information about. So here we can see that Bitcoin is the #1 cryptocurrency, and we can look at its price here. We can see the 24-hour change, and we can see the market cap is 340 billion. These are 3 commas if I'm not wrong, 1, 2, 3. So this is the largest cryptocurrency by market cap. You can see the next cryptocurrency, which is Ethereum, which is also quite a large cryptocurrency. You can see the market cap of Ethereum is 1, 2, 3. This is $63 billion. So the difference is quite huge. So there's a lot of value locked in Bitcoin. So in this lesson, we shall also try to understand why Bitcoin and why is it as big as it is? Why is it fundamental to your life and mine in the whole world? And how is it changing economies and communities as it is? So Bitcoin is a large cryptocurrency, mostly because of the technology. And here we can see Bitcoin runs on the blockchain technology. This is essentially a time-stamped series of immutable, or in other words, permanent databases that is managed by multiple decentralized computers. So when we go back to this definition here, it says that cryptocurrency is a form of digital asset based on a network that is distributed across a large number of computers. Then when we scroll down here and explore the value of Bitcoin, we see that Bitcoin runs on the blockchain technology. So this blockchain technology is what is essentially is a time-stamped series of permanent databases that is managed by multiple decentralized computers. So this decentralization that we spoke about in the previous statement is what runs the blockchain technology. So this blockchain technology, it is basically just an Excel sheet. It is basically a programmable Excel sheet that is hosted by everyone in the whole world. That is how I would explain a blockchain to a person who does not understand it easily. So blockchain technology is just basically, it's a ledger, but this ledger is not hosted by Microsoft like Excel does. This ledger is hosted by a lot of people all over the world. So all those people hosting this ledger know exactly what is coming in and going out of this ledger. So they can verify this, and that way it can avoid any type of cheating, and it is an open, so anyone can see what is going on the Bitcoin blockchain. It is open and it is transparent. So it runs on this blockchain technology, which is basically a distributed ledger. It is basically a distributed ledger of time. Here we can see it's a time-stamped series of permanent information. That is how I would say it. Since it's a ledger like Excel basically carries information, right? So this information is hosted across multiple decentralized computers. This way, not one single person can have power over the network, because each and everyone has the same or equal power to see what is going on, to vote about what is going on, to dictate the terms and conditions, to check what the other person is doing. So this ledger is distributed, and it is time-stamped, and it is permanent. It can never be changed. Once a transaction is put on the blockchain, it is there permanently forever. This is due to the nature of the cryptographic techniques used to build the blockchains. So let's repeat this again. Bitcoin runs on the blockchain technology. This is essentially a time-stamped series of immutable databases that is managed by decentralized computers not owned by a single entity. Each block of data on this database is secured and bound to each other using cryptographic principles, as we also stated above. So any question until there?
Jack, so maybe you can share with us the history of Nakamoto Satoshi.
Oh, yeah. I think I should have started with how we got to Bitcoin and who invented Bitcoin. So Bitcoin is still quite a relatively new innovation in the technology space, and it was essentially created by either a person or a group of people known as Satoshi Nakamoto. So I think everyone will definitely Google that name after this lesson to learn more about him, as I did back in the day. So Satoshi Nakamoto basically published the Bitcoin white paper in 2008. And this problem he was trying to solve is a problem that a lot of scientists have been trying to solve for ages. So back in the, I don't know, 1700s or 1600s, accounting used to be different. There used to be just one form of accounting, right? The form of accounting was basically barter trade. You give me a product, I give you a product. You give me beans, I give you maize. You give me maize, I give you grass. That was basic accounting. And then as time went by, a different form of accounting came in and started being adopted. That was a debit and credit, right? So people started adopting this accounting system that say, oh, so we can have a debit here and we can have a credit here, but who will keep the transaction records? So the banks came in, and the banks popularized the whole debit and credit system of transactions of accounting. So that was basically popularized up until recently in the 90s, where a certain scientist also came up with the third way of trying to verify transactions or accounting. So the first one was simply barter trade. The second one was debit and credit. And this scientist came in and said, I think we can have a third way of accounting where you don't need a bank to be an intermediary. You can be the intermediary yourself. But he didn't have the technology of how to do it, but he made the proposal. So it went on and on and on. And in 2008, a pseudonym or a person or a group of people called Satoshi Nakamoto printed out what was the solution to solve the third principle of accounting, which was to have transaction. Usually the principle was debit and credit, and the third layer was missing. So he proposed this third layer to be a person and to be a network that is distributed. Thereby, we don't need a bank to verify these debits and credits. We can do the verification ourselves. So that was the third step in that solution. So when he printed out the paper, he said, look, if you want to do transactions, we can make this trustless. We do not have to trust governments. We do not have to trust banks. We just need this to be hosted by everyone, and everyone can see what everyone else is doing. This way, they do not need to have trust because the trust is verified by the system. So Bitcoin and blockchain is basically a trust system. And since it's on the blockchain, it does not need to have trust because the trust is embedded inside the code, right? So when you want to do transactions on the blockchain, you don't necessarily need to trust someone else because the system makes it that you don't need to trust because the monetary policies are already ingrained in the system. They're already ingrained in the blockchain. They're already ingrained in the code. So this was the third layer of that accounting problem that Satoshi Nakamoto was trying to solve, that we do not need banks to do debits and credits. We can handle this ourselves. So this is where he came up with the idea of Bitcoin as a currency and blockchain as the network that runs the Bitcoin cryptocurrency. So that is a bit of a history of how about Bitcoin came about and why it is a very interesting thing. So even if you will not invest in it, but at least you can appreciate the amount of technology and the problem solving that it needs. Because before Bitcoin, it's only banks that could settle transactions. You can just think about that. Before Bitcoin, only banks could be able to settle debits and credits. But right now, with Bitcoin and blockchain, me and you can be able to settle debits and credits, because the blockchain makes it that we do not need trust as long as we have transactions on the blockchain and everyone can see what everyone else is doing. This is the third accounting problem that Nakamoto and the team were trying to solve. So that is a brief history about how Bitcoin came along and why it is such a big deal in this 21st century, because it's offering a solution that was otherwise problematic to scientists previously. And the other problem that Bitcoin is trying to solve is also the double spend problem. And this double spend problem, I would describe it as when you have 1 unit of currency, you can basically spend it twice. So this is also a problem that scientists have been trying to solve for quite some time in creating a digital currency, that if you have 100 Kenya shillings, how would you make it that you cannot send it to more than one person? Because if you put it in a digital ecosystem, even in a bank setting, 100 could be sent to multiple people without tracking this 100 shilling, because it's digital, it's just a number, right? When you go to a bank system, it's just a number, it doesn't have a code. This is just numbers moving from point A to point B. So Bitcoin basically solved that double spend problem by hosting it on the blockchain. And in the blockchain technology, each and every transaction is tied to the next transaction. So you cannot have one transaction twice. You can only have it once, and it's permanent and it's public and it's visible. No one can be able to change it. It's immutable. And this makes Bitcoin to be very secure and very neutral. So that double spend problem that scientists have been trying to solve was essentially solved by having Bitcoin run on the blockchain network. So that is kind of a bit of a brief history of how Bitcoin came to come about and what problems it is trying to solve. And we are going to explore this along the way as we go on with the class. So is everyone at par with that, Robert?
Yeah, if anyone has got any question, you can kindly share on the chat area. Then Jack will respond shortly.
Yeah, no problem. As long as you have a question, kindly put it in the chat area and then we shall discuss it as we go on with the lesson. All right, so we can proceed here. So why is Bitcoin the most important cryptocurrency? This is because the Bitcoin blockchain is the largest computing network in the world, with multiple decentralized servers making it censorship resistant. We put emphasis on this censorship resistance because currently we don't have a currency that is censorship resistant. A lot of things in our modern world, as they are not censorship resistant. And when we combine the computing network of Bitcoin in comparison with any other computing network, including that of Amazon or Microsoft running, it is basically the largest computing network in the world. So it makes it very, very difficult to attack the Bitcoin network because it is very, very expensive, and it could take quite some effort to attack all these computer networks at once because they're completely decentralized. We have people who are hosting Bitcoin nodes in Nigeria, in Kenya, in China, in Australia, and they're all individual people and they're hosting it. So they have quite some large computing power when you put that as a sum in the whole world. So this is what makes the Bitcoin network very, very secure, in that with the multiple decentralized servers hosting it, it makes it somewhat censorship resistant. So that is why Bitcoin is the most important cryptocurrency to date, because we don't have any other cryptocurrency that has a bigger computing network than Bitcoin. So this is why Bitcoin is a big deal in the crypto space in general. Bitcoin is also the only cryptocurrency trying to evolve into the next level medium of exchange and store of value. So also going back to history, I know this is a very philosophical concept, that you will discover that we have not had an evolution of money for hundreds and hundreds of years. I was looking at history and I was looking at it, and it was saying for over 400 years, money as we know it, as paper money as it is, has almost never evolved. Until Bitcoin, money was just simply money as it is. It was just the Kenyan shillings. The policies were still the same all the way throughout 400 to 500 years ago. Until Bitcoin, this is the only time we've ever seen currency evolution. So Bitcoin is the only cryptocurrency trying to evolve into the next level medium of exchange and store of value in terms of currency evolution. So we even have like, I think a couple of weeks ago, the CEO of PayPal was also saying that they see the future of Bitcoin as a medium of exchange and as a means of payment. Due to the decentralized nature of it, that no one can attack Bitcoin, no one owns Bitcoin, he personally saw that Bitcoin could evolve into the next level medium of exchange. So this is a very, very interesting concept that you as a person who is living in the 21st century right now are able to see an evolution in money. People who lived in the 20th century and never got into the 21st century do not understand any different form of currency. They only know paper money as it is and government fiat money as it is. But us in the Bitcoin and cryptocurrency space, if we have this knowledge, we are able to at least participate in this, or at least have the understanding to see how a currency could evolve into the next level medium of exchange and also store of value. So maybe in future, if we do not have a US dollar, maybe we will have Bitcoin as a reserve currency. Maybe we'll have Ethereum as a reserve currency. So it's very, very new technology. It is still very young, barely 10 years old. But as time goes by, it is evolving, and we're seeing how the developments are taking on in this space. So this is one of the reasons why Bitcoin is important. So to you as a person, if you're still struggling with the concept of why Bitcoin, you know, I see the price going up and down, oh, this is a scam. But do you understand the technology behind it? So it is trying to solve fundamental problems that societies have. This is not a scam. This is not something that is trying to grab your money. But no, this is a brand new technology, and it is trying to solve fundamental problems the society has had for a long time. We have never had an evolution of money. We have never had a third accounting system apart from the debits and credits. So it's trying to basically solve fundamental issues that communities have faced. Will it come out as the winner? Only time will tell. But at least when we understand what is happening, we can be able to take advantage in case in future we ever have to use cryptocurrency as a mainstream level of medium of exchange. So that is also why Bitcoin. So in general, when we talk about cryptocurrencies in the crypto space, does anyone have any question? I welcome any question before we go into the next leg here of types of digital currencies. Because as I explained, Bitcoin is the biggest digital currency and biggest cryptocurrency right now. So we want to go to the next topic, and we want to find out what are the different type of digital tokens in the crypto space. So from the Bitcoin introduction, the blockchain introduction, if everyone has a question, we can tackle it and answer it right now. Before we proceed, you can just raise your hands and I will definitely turn to you. So shoot. Robert, do we have any question? Can you see any question?
None as yet. So I think we can proceed. I've seen Nicholas. Sorry, Nicholas has raised his hands. So just
can allow him to speak.
Nicholas, go ahead.
Hi everyone. Can you hear
Morning,
me?
Nicholas. Yes, we can hear you loud and clear.
Yeah. I have a question with regards to the cryptocurrency. Bitcoin is the only cryptocurrency that you can trade or what?
We are actually going into that in the next topic. You can see here we have 3 types of digital tokens. And after that, we shall delve down deeper into all the other different types of cryptocurrencies and what they're trying to bring into the system.
Right.
Yeah, but Bitcoin, we're basically starting with Bitcoin because it was the first cryptocurrency. So we're starting historically from the first one, going onwards.
Oh, okay.
Yes, correct.
Thank you.
All right. Thank you for your question. That was a very nice question. Anyone else have a question? Robert, do you see any question on your side?
None, so I think you can proceed. So in case of any questions,
Perfect.
You can make use of the chat area or the Q&A panel.
Perfect. It looks like we have a very, very intelligent audience today. They know quite some stuff about crypto. All right, that's very good. So in general, we have three types of digital tokens in the crypto space. This is I tried to format this in a way that a lot of new people can understand. And so I will talk about the first one is a cryptocurrency. So I will explain this differently. We don't have this kind of content on the internet. When you go and try to find types of digital tokens, it can actually be very confusing. So I sat down and I studied all of them, and I came up with these three general categories that will help you as a person who is trying to understand cryptocurrency, really get what this whole space is about. So I will start with number one. Cryptocurrency, like Bitcoin, is trying to become a medium of exchange and store of value. So here we will focus on the word currency. Yes, all the other tokens that are in the crypto space can also be considered cryptocurrencies, but the one that is trying to become a currency, is trying to become a medium of exchange and a store of value, we have only one, and that is Bitcoin. So when we have digital tokens in the crypto space, one that is trying to become a type of currency that can be used in the real world or also in the crypto space is Bitcoin. That is just that, plain and simple. That is just how you should understand it. We do not have any of the cryptocurrency that is trying to evolve into money apart from Bitcoin. So that would be the first category. The second category is utility tokens like Ethereum. So what is a utility? I think everyone understands tokens. Tokens is just, you see the electricity tokens, when it dies, that one is just a token. It's the same thing here. So we have utility tokens. So what is a utility token? Utility token like Ethereum, which we can see here, is the second cryptocurrency by market cap. We have Bitcoin being number one, we have Ethereum number two. So utility tokens like Ethereum, they basically open doors and give you access to a system, basically like KPLC tokens. KPLC tokens give you access to electricity. Without the tokens, you cannot get access to electricity. So utility tokens like Ethereum, they basically open doors and give you access to use the systems. So that is about utility tokens. And number three, we have a different category called tokenized security. This is basically a digitized form of an equity. The digitized form of an equity, this is basically, I think all you guys are coming from the investment side, so I don't really have to go deep into what equities are, but these are basically investment options. So these are basically cryptocurrencies that will invest on your behalf and possibly pay you back a return. So we have those different types of digital tokens in the crypto space. One being cryptocurrency, two, utility token, three, tokenized security. So you will meet a lot of this going forward in the crypto space. So we have hundreds of cryptocurrencies. Let me just show you an example here. You can see here cryptocurrencies. This coin market cap, as I had said previously, this is like the Nairobi Stock Exchange. Robert, I don't know where you can post this. Can we post this here in the chat?
Yeah. Let me share it on the chat.
Kindly share it for me on the chat so these people can just be aware.
Okay.
Yeah. So that they can also see what I am seeing. But while Robert is doing that, we can see here cryptocurrencies. We have 7,963 cryptocurrencies in 34,000 markets. So all these cryptocurrencies are available to trade with, and they all offer different solutions in the crypto space. But all of this, I have summed them up in these three types. They all fall under this. All these 7,000 cryptocurrencies fall under these three types. It's either a cryptocurrency like Bitcoin, which is trying to become a medium of exchange and a store of value, or it is trying to become a utility token like Ethereum. They basically give you access to their system. And number three, it is basically a tokenized security. A tokenized security is a digitized form of an equity, because nowadays you can even digitize whole apartments and put them on the blockchain and trade them. The same way we have, was it the Nasdaq, Robert, that was putting up equity for water? I think water is now getting traded on the Wall Street.
Yeah, it actually happened this week.
Yeah, it actually happened this week. So the same thing can happen in cryptocurrency. We can digitize water, we can put it on the blockchain, people can trade it. So this is what tokenized securities are. Then utility tokens basically give you access to the system. Cryptocurrency, they become this, like Bitcoin is trying to become a medium of exchange and a store of value. So all these cryptocurrencies, these 7,963 of them, I have basically summed them up into these three types, and this is what you will need to understand the whole scope of cryptocurrencies. So now that we know what Bitcoin is, that now that we understand the technology behind Bitcoin, now that we can see we have different types of cryptocurrencies, now that we know we have so many different types of cryptocurrencies, I think we can ask ourselves, what is the next step from that? What should we do? So the next step would be trying to understand how to get into the crypto space. In this masterclass that we're also going to look at, the value proposition of Bitcoin is still going to go on along this class. And should you have any question about it, feel free to ask. I shall answer it as promptly as possible. But I kept it brief for this one so that we can go on into the next question. But we have a lot of philosophical topics that we can discuss. Why Bitcoin? Why is Bitcoin money? Why is Ethereum money? Why is this system is better than what we have currently? Those are all philosophical things and fundamental things and financial aspects we can discuss at a later class. But for now, I hope you have a clear understanding of what Bitcoin is and the technology, the blockchain technology that runs Bitcoin, the decentralization nature of Bitcoin. So basically, that's what we can sum that up. So going on to the next step, devices required to purchase or trade cryptocurrency. So let's say now you have learned about Bitcoin and you're asking, maybe I just want to test out of my portfolio. Maybe I will put 0.1% to buy Bitcoin just to see if it has any value to me, or to see how the volatility goes, or to even just experience the technology. Because if you don't understand the technology, then maybe you need to just experience it, and then you will have a clear understanding after that. So we can start here. We have a mobile phone, PC, laptop, hardware wallet, or software wallet. So in this case, I think everyone has a mobile phone. Most of us are joining through PC or laptop. Here we have a hardware wallet and a software wallet. So we shall be explaining what all of these are. So when it comes to Bitcoin and cryptocurrencies, they're basically hosted online on the blockchain. So blockchains offer something called wallet. It is no different from an M-Pesa wallet. It is no different from your bank account. It is just the same thing. It is now you are your own bank. In this scenario, the Bitcoin offers you a solution, and it tells you you are your own bank. You will handle your money. You will dictate what goes to your money. You will dictate the monetary policies that pertain to your money. So it basically gives you access and the power to become your own bank when you have a cryptocurrency wallet, because it's decentralized and only you can have it. Only you can have the PIN and the password. It is generated by the blockchain, and it is secure. It is private. No one else can have access. So it also brings a different concept. People are not used to being their own banks. People are used to giving banks the responsibility of handling their money. But crypto, remember, it's decentralized in nature. So it is giving you the power. Rather than giving a central authority the power to take care of your crypto, it is giving you the power to take care of your own assets. You will become your own bank. You will take care of your own transactions. So here we can see, let's talk about a cryptocurrency wallet. So what is a cryptocurrency wallet? A cryptocurrency wallet, essentially, it is something that holds your private keys. And in the context of cryptocurrencies, a private key address is a string of numbers that allows users to sign transactions and generate new receiving addresses. So now that we understand what a cryptocurrency is, it's just a place on the blockchain where you store your digital assets. And when you store your digital assets, the blockchain gives you something called private keys. So private keys is a string of numbers that allows users to sign transactions and generate new receiving addresses. So these private keys are basically like your bank account PIN number. It basically gives you your bank account PIN number, but in this scenario, you are the own bank. So once you receive your own private key, you are essentially your own bank, and you can never share this private key to anyone, because as long as you give your private key to someone, they can have access to your funds. So your private key is like your bank account. It is just a string of letters and numbers that allows users to sign and generate transactions. So this we have to keep in mind. It is just what in the real world is a PIN number for your bank. In crypto, it is called a private key because it is generated through cryptographic techniques. So in cryptographic techniques, PIN numbers are referred to as private keys. So I hope everyone understands that concept. So in your crypto wallet, you will always have a private key that will help safeguard your transactions. So Good. The next one we have, while a public key address is a string of numbers given to identify a particular user. In the real world, it's akin to a bank account or an M-Pesa number. For more localized contexts, I would put an example here. And an M-Pesa phone number is basically like your Bitcoin public key. So when you have a public key for your Bitcoin, this is what is called like a Bitcoin address. People who are in crypto refer to like a Bitcoin address. So when they say send me your Bitcoin address, it is basically a public key. So this public key is what you send to someone else to receive your Bitcoin. This is what people see. When you send transaction, they see, oh, this public key sent a transaction from this address to this address. This is what people see. They see your public key. And an M-Pesa PIN number is akin to a private key. So when you have a phone number, that is your public key. You can show it to everyone. When you have your PIN number, that is your private key. You cannot share it to everyone. But in this case, it's not Safaricom holding your private key. It is you individually holding your private key given to you by the Bitcoin blockchain. So if you lose your private key, you basically lose access to your funds, because in this scenario, it is decentralized. No single party owns the private key. Only you can own one private.
I think you've lost Jack, so let me try to reach out to him.
So here we will have a set of tasks that I think will make everyone do. Hello, Robert, can you hear me?
Yeah, I can hear you now.
Okay, perfect. My internet connection was just unstable for a second, so we can proceed. You will have a set of tasks that people can do in order to understand what is a Bitcoin public key, what is a Bitcoin private key. So I will refer people to a website called btc.com, so that at least by the end of this class, you can just go to btc.com, sign up with your email address, confirm your password, and btc.com will generate a private key that you shall use to access your fund. You can keep your private key safely, and boom, you have a Bitcoin wallet. It is basically that simple. That is basically how the first step to unbanking yourself and exploring the digital currencies. So this is a task that I will basically share with everyone. I think Robert, you can put this in the Q&A section, and during the break, people can try to set up a btc.com account and try to set up their wallet. And so that if they have any question about setting up their wallet, they can ask, and then we can help them out.
Okay, thanks.
All right. So the address is btc.com. Let's just go to it to see how it looks like, so that everyone can be on the same page. So the page will look something like this. I think I should actually, Robert, do you think I should just sign up so people can see how the process works?
Yeah, I think that would be better.
All right, good. Let's make it practical. So the first thing you need to do, you can follow me if you're very quick. If you're not quick, I can also ask a question as we go by, and I will guide you through it. So first thing, we head to btc.com. You have to make sure it is btc.com. It looks something like this, and you will see we have whole wallet blog stats. So what we're interested for now is just set
Looks like Jack is facing some connection issues.
It takes a bit of time because it always checks for IP address. So
okay.
Yeah, if I have more than one wallet, sometimes it tends to block me until I have to refresh my browser.
Okay.
Let me try again. Yeah, it always does this for me. I'm not sure why, because I have more than one wallet, but usually it should just open directly. So I think for people who are watching, you can proceed with this, because I have to restart my browser every time it does that, because I have several wallets. So you can just head to btc.com. It's just like signing up on a Facebook account. Sign up with your email address, confirm your password. btc.com will generate a private key that you will use to access your funds. Keep your private key safely and back it up. If you lose your private keys, you lose access to your funds. btc.com does not have access to your private keys because btc.com hosts the blockchain, the Bitcoin blockchain, and the Bitcoin blockchain automatically generates private keys. So if you lose your private keys, you basically lose your wallet and therefore your funds. So you want to keep your private key very safely. All right. So as we go by, I think during the break we can come back to this task and make sure everyone has at least a private a Bitcoin wallet by the end of this class. For Ethereum, you can use mycrypto.com. So I think I will try this one so that we can see. So I think this one is much easier for me. So I think I will need everyone's attention from Bitcoin.
Jack, are you there?
Because they have so many other products inside their system, but it is still running on a blockchain. It is still a cryptocurrency, but it is not trying to become a medium of exchange or a store of value. It is trying to offer something different, which we shall explore throughout this lesson. But for now, we want to see how to set up Ethereum wallet. So you would come to mycrypto.com/account. Robert, you can see my screen, correct?
Yes, I can.
All right, good. So here we basically have different options to access the wallet. Here, first of all, since we've only learned about private keys, we shall basically use the private key option, but we have so many other options that are very secure. We shall explore this as time goes by. So you can click on private key, and it will ask you to download my crypto desktop application. Luckily, I already have it. So let me just share the screen of my crypto. Give me one moment, it's open now. All right, let me just share. Robert, can you see my screen now? Do you see my crypto?
Yes, I can. So I can see your screen with the My Crypto app. Jack, are you there? So as Jack reconfigures his network, I hope that you are learning something. So for crypto, we are looking at the opportunity to diversify our income, and possibly it could be something very big in the days to come, because we are seeing like the establishment. So by establishment, we are talking about the corporate world, central banks, big institutional investors like JP Morgan Chase, Goldman Sachs. So all of them warming up to Bitcoin. So that's an opportunity that's very important for us to get into it before everyone else starts looking at it. And also by being knowledgeable about it, we'll protect ourselves against scams that are very many out there. So we've had so many of them globally. So this is an opportunity for us to learn. So Jack will be back shortly.
Hello, Robert, can you hear me?
Yes, I can hear you. So I think you had a connection issue, but you can proceed.
Oh, yeah.
So you can share your screen.
Issue. All right, perfect. You let me know when you can see my screen. Can you see my screen now?
Yes, I can. Yeah.
All right, perfect. Perfect. So as we had pointed out before, we want to set up an Ethereum wallet, and I would recommend setting it up on my crypto.
Jack, are you there? So sorry for the connection issue.
Transaction. How about now?
Yeah, now it's good. Yeah, you can see it.
All right. You bear with me. If it persists, I'll just have to restart my whole internet connection, and then we can try again. So for now, we can proceed. You can still hear me clearly? Hello?
Yeah, yes, we can.
All right, good. So we're going to choose the private key option. So for people who will use My Crypto, you will have to download the My Crypto application to your desktop. And then we're going to sign up and have an Ethereum wallet in less than 5 minutes. So how we would do it is you would click on the private key option, and it says unlock your private key. Now let's just see this. We need to say here don't have a wallet, since we're creating a new one. And let's see. Say here generate a wallet. So after generating a wallet, it usually gives you these two options. These are basically backups for when you have forgotten your private key. So number one, you click generate a keystone file, and then this keystone file will ask you for a password. So we do not need a keystone file for now. I'll show you what is much easier. You see this mnemonic phrase? Robert, you're still with me?
Yeah, yes.
All right, good. So we shall always use the mnemonic phrase because this is much easier for people to store. And you can see here, a mnemonic phrase is a 12-word private seed phrase. You can back it up on a paper or USB. It can be written, printed, and easily typed on mobile too. So this is what you can use to back up your wallet. In case you have your wallet hosted on this computer and this computer fails, you can basically take your mnemonic phrase and start the same wallet on a different computer. So we're going to generate the mnemonic phrase. So it gives you a combination of 12 words, like it says helmet, sound, galaxy, etc. And so these are the words that you can use to recover when you lose access to your computer. So you need to store your mnemonic phrase safely. So that is how a mnemonic phrase looks like. You can just click confirm phrase, and then it will tell you click the words in your order. If you've forgotten the next word, click reveal next word below. Since I already took a picture of mine, I can click helmet, sound, galaxy, salt, have, cloth, turkey, rude, flag, seal, wrap, photo. So this is just a way to help you set up your wallet in case you have lost your private key. So this mnemonic phrase is very, very important for emergency cases that you have lost in your private key or your PIN in this case. When you lose your private key or your PIN, you don't call a bank, you don't have any customer care. This is your customer care. This is what you should use to access your wallet if you lose your private key. So we can say confirm. And it says all done. You're now ready to access your wallet. Just follow these 4 steps whenever you want.
Jack, we've lost you. So I think this app is very, very heavy when it comes to internet usage. Okay, Jack is back.
Robert, I think the internet connection is quite unstable right now. So what I suggest, we can proceed with the class, and then this practical, we can do it. I have to have restarted my connection, and then we can proceed after that. If you're okay with that.
Okay,
so let me just cancel this. All right, so we'll do this practical lesson for the end, but for everyone who is available and they're very quick, they can do the bitcoin.com setup, that one is much easier to handle. All right, so here, if you wish to pursue crypto as an investment, sooner or later you'll need to store your funds in a hardware wallet rather than a software wallet like btc.com. So as we have been exploring before, this btc.com is a software wallet. By a software wallet, we means not a hardware. It is basically a software that is hosted online. So you can use it to access your wallet at any time as long as you have your private keys. Same for mycrypto.com. It is a software wallet that is hosted.
Jack, we've lost you again.
Comfortable using wallets that are hosted online because you fear losing your private keys, because you know private key is a string of numbers. Let me just Google here to show you how a private key looks like. If we have a picture, let's see if we have an image. Yeah, so basically a private key would look something like this. It is a string of numbers that you always have to key in order to have access to your wallet. So it always looks something like this. This would be your private key from here A to B here. So you would need to store that somewhere safely on your computer. And each time you need to log into your wallet, you would copy this and paste it to your wallet. That way you'll be able to access it. But if you feel like you don't want to keep doing this because you're afraid you might lose your private key, then we go to the next option. The next option is, rather than a software wallet, you can have a hardware wallet. So a hardware wallet, I think I will share this video after the class and everyone can see what a hardware wallet. But in general, a hardware wallet is a device that helps you to access your crypto funds a lot easier. With a hardware wallet, you just need a password. You would plug it into your computer, and after you plug it into your computer, you would be able to see your wallet and thus have access to your money. I think I could also share this video right now. I think, Robert, you can share this link so that people can just see how a hardware wallet looks like. Can you hear me, Robert?
Yeah, let me do that. Yeah.
All right, sure. So for people who are still doing btc.com, this would be a great tutorial. I'm sorry, this one is not the one for the one I wanted you to see, but this is the tutorial for btc.com. In case you get stuck, you can come to this YouTube video to see how you would set up your Bitcoin wallet. For someone who would get stuck, you can ask me anytime, or you can ask Robert anytime, no problem. But if you need another point of reference, I would highly recommend this video here, and Robert will send the link in a few minutes. And if you want to see, let's just have a visual of a hardware wallet. I have one called the Ledger Nano S. Yeah, so this is basically what it looks like. This is basically a hardware wallet. This is how it looks like, and it basically stores your private keys for you. Rather than having your private key on a computer, you basically have your private key inside this device, and the only thing you'd have to do is type in your password, plug it to your computer, and you have access to your funds. And it is completely decentralized because you have the private keys. So as long as you type in the private keys and your password, you basically log in, and it uses the same cryptographic technologies to make it secure. So this is how a hardware wallet would look like. So this is, in crypto, this is basically your bank. So if you lose it, there's no problem. They have the mnemonic phrase we saw previously. You can use your mnemonic phrase to recover this wallet on another device. So we have different options for backing up information in crypto. But basically, this is the hardware wallet. If you're more serious into crypto investing, you want to put a large amount of money, this is what I would recommend, getting a hardware wallet. Because, you know, private key, you can easily lose it if you're not careful, or you can easily expose it and someone else can have access to your funds. But a hardware wallet, it's only you and you alone. Not the government, not your neighbor, not your brother knows what's inside it apart from yourself. So this is basically how a hardware wallet looks like. And on a different lesson, we shall explore all the functionalities and how it works. But basically, for our starters, we have two different types of wallets. We have software wallets and hardware wallet. The software wallet is like btc.com, and the hardware wallet is the Ledger Nano S. So it basically has an inbuilt software where you can see your wallet and everything inside it, and you don't have to always put in your private key because that is a tiresome process. So this makes work a little bit easier for everyone. And then so everyone can watch that video to set up their btc.com account. So on lesson number 2 here, we're going to explore several things. We're going to explore how to buy Bitcoin and other cryptocurrencies in Kenya. So now that we've learned about Bitcoin, we've learned about how to set up a wallet, and I think most of you will explore how to set up a wallet. If most of you have already gone through that process, that would be very good. I don't know if anyone has a question regarding how to set up a Bitcoin wallet. And we can tackle it right now.
Yes, so we have a few questions. Some of them we can tackle them now. So first is from Brian Kinuthia. Brian says that it is interesting that there are more than 7,000 cryptocurrencies. So he wants to know what is the ratio of these in the 3 categories. So we are talking about security token. Yeah, like the 3 categories that you mentioned. So out of those cryptocurrencies, which are the majority?
All right, the majority are utility tokens. Who asked that question?
Brian.
Oh, Brian.
Yeah.
So let me just point out. So Brian, your question was, out of the 3 digital tokens types, which one is the majority? The majority is the number 2, which is utility tokens, because we have different types of cryptocurrencies trying to solve different types of problems. I mean, we have cryptocurrencies that are trying to bring, they're trying to onboard small businesses to accept cryptocurrencies. And therefore, they create utility tokens that these small businesses can use to do transactions. So these utility tokens are what is the majority. When we look at this list here, we have a ton and a ton of them. For example, Ripple or XRP. This is a private blockchain that is currently being used by banks to facilitate transaction. So that is a utility token because it can only be used for one specific reason. And then we have the TUSDT, or the US dollar Tether. This is another cryptocurrency that is tagged, it is pegged directly to the dollar on a 1-to-1 ratio basis. So the Tether will always be $1 as the dollar remains to be $1. So it's pegged directly to the dollar. And so you can only use it for one reason. So we have Litecoin. Litecoin is just a better version of Bitcoin. Its transactions are faster, and you can execute many things on Litecoin faster than you can on Bitcoin, but it's not trying to be a cryptocurrency. So you can only use it also for some single purposes. Same with Chainlink and the rest of them down here. So we find that utility tokens are the majority from all of this. For the only one that is trying to become a medium of exchange or a store of value is only one, and that is Bitcoin. For tokenized securities, we have several of them, but not so many. So majority, I would say, are utility tokens, to answer your question, Brian. Any other question?
So the next one from Savio. So Jack, please repeat the hardware stroke software wallet part. We lost you.
All right. Okay, sure. No problem. So let's see here. All right. So I will make it simpler to understand this way. That in the cryptocurrency space, we have 2 types of wallets. So we have 2 types of wallets. One is a hardware wallet. 2 is a software wallet. So an example of a software wallet is what we just tackled right now, called btc.com. So when you're starting your journey, you could start with a software wallet like btc.com. The goal of crypto is so that you are always in control of your own funds. So we have all these other different wallets that you probably have heard of, like Binance, like Paxful. All of these are centralized companies, so they hold the private keys for you. But if you want to be your own bank and hold your own cryptocurrencies, you would start by going to a software wallet like btc.com. This is specifically for Bitcoin. That is what I recommend for starting out with. Later on, I can recommend more advanced wallets. But for starting out, it's a software wallet. It's basically a software. It's basically like an Excel sheet. It's basically a software like any other software you use. And so it's hosted online, and you can use btc.com to access your wallet and therefore your funds. And the second type of wallet we have is a hardware wallet, which I demonstrated here. This is a physical wallet. It is a physical device that helps you. You plug it to your computer and it gives you access. It basically gives you access to your funds. So this one is also much more secure, and it is much easier to use logging in, and it's also very, very secure, since only you can have your password, and you don't need to type in your private key all the time. It basically holds your private key very securely, and you only need to type in your password to get in and access your funds. So those are basically the two types of wallets we have: the software wallet, btc.com, hardware wallet, the Ledger Nano S. And you can see even here they have a price. The Ledger Nano S is currently 8,920. So for anyone who is a serious crypto investor, we always have one of these around. So that is all about the Ledger Nano S, which is a hardware wallet. We have a different type of hardware wallet, but for now we're okay starting to understand this one. So this is a hardware wallet. So I think that answers that question, Robert.
Yes, it does.
All right.
Yeah, I think we can take one more question, then we'll look at the rest later. Julie has asked, what are the pros and cons of purchasing Bitcoins / Ethereum on a trading or a third-party platform like Etoro, PayPal, blockchain.com, trading212, etc. Such platform manage the keys and the technicalities for you in an attempt to abstract complexity of owning crypto. Is there a risk for choosing this route? I think basically these are CFDs, right?
Yeah, these are CFDs and ETFs, right?
Yeah.
All right. So we will pick an example of Etoro. So Etoro is a platform where you can trade different types of assets and equities and shares of companies like Tesla, if you want to buy Tesla stock, if you want to buy Apple stock. So companies like Etoro essentially sell something that is called, I think it's an electronically traded fund. So you are not buying Bitcoin, essentially. When you're trading on Etoro, Etoro do not hold Bitcoin. Etoro do not sell Bitcoin. They sell something called an ETF. An ETF, it basically derives its price from the underlying asset. So if you're buying an Apple stock on Etoro.com, you're not buying the real Apple stock. You're buying an ETF, which derives the value from the underlying asset, which is the Apple stock. So when you see Bitcoin on Etoro, you are also not purchasing Bitcoin. You are purchasing an ETF, which derives value from an underlying asset, which is Bitcoin. So they do not hold your private keys, essentially. You just buy a different type of product, right? And what was the other one she mentioned?
What else? You talked about blockchain.com and PayPal, like what PayPal is doing.
All right. So for PayPal, you are also, I haven't used the PayPal service, so I will not comment on that one. But I also think it could have been the same situation. I don't know if PayPal has a private key for you and a public key. I will not comment on that one because I haven't experienced it myself. But I will definitely do some research and get back to you on the PayPal one because I haven't used it myself. But all these other platforms that basically hold your keys for you, we have different forms. You could ask yourself, as an investor, what are you looking for? Because we have different kind of investment options, right? So if you're looking to store your own money for yourself, if you don't want to hold the Kenyan shilling, personally, I don't hold any Kenyan shilling at any point in time. I hold all my money in crypto, and should I need to cash out, then I will cash out and buy something. But otherwise, I'm not a fan of the Kenyan shilling. So for me as an investor do I have the motivation to hold the Kenyan shilling? No, it's an asset that depreciates. So what do I want to do? I want to be my own bank. So in this scenario, I will create a BTC.com wallet. I will have my own private keys. Maybe I will buy a Bitcoin, or I will buy any other crypto asset that interests me. Therefore, I can track my money there. I can see my money there. I'm comfortable with that situation. But you can have a different type of investment options for you personally as an investor. And you might not want to buy Bitcoin directly, but you can see the price movements in Bitcoin and says, this is interesting. Maybe I want to trade Bitcoin, right? But I do not want to hold the Bitcoin exactly. So you might go to electronically traded funds that are hosted on Etoro, and you can purchase them there. And you can also enjoy the volatility that is in Bitcoin if you are a trader. You can also trade Bitcoin without necessarily purchasing it, because we have products that are offered. So you can see all this volatility where the prices go up and down. So if you're a trader, maybe you're interested in cashing in on this kind of volatility. So for you, you might not necessarily need to have a private key and be your own bank. You just want exposure to the asset. So in that case, then you would find a service provider like Etoro and say, hey, I don't want all the complexities of Bitcoin. I don't want to understand the technology. I just want to trade. So in that scenario, and you would basically go to Etoro and you would find CFDs and ETFs, and you'd be able to have exposure on those assets in that scenario. So it's what kind of investment are you looking for? That's how I would answer that question. Because you're not essentially purchasing a Bitcoin. You're purchasing an ETF that derives its price from a Bitcoin. That is how I would answer that question, Robert.
Thank you very much for that. So on Etoro, actually, I've been using it to get exposure into Bitcoin and Ethereum. So it's quite a good platform. So basically, it goes with the movements in the price of the asset class rather than owning the asset class itself.
Yes, correct.
I think we can proceed then. So Jack, we can proceed and take the rest of the questions later.
Hello, Robert, can you hear me?
Yes, I can hear you.
All right, so I see there's a question on the chat here. So simply cryptocurrencies are a form of investment, right? Can we categorize them as long or short-term investments so as the interest to accrue? I think we will see this as the lesson goes by on how we can invest in cryptocurrencies and what to expect when you're investing in cryptocurrencies. So that one, I'm coming to it. So now that we have learned what Bitcoin is, the next question is, and we have a Bitcoin wallet per se, and we understand what is the difference between a hardware wallet and a software wallet. So how would you buy Bitcoin and other cryptocurrencies in Kenya? So now we have to understand that due to the decentralized nature of cryptocurrencies, we have companies called cryptocurrency exchanges. So these cryptocurrency exchanges, for example, like one very big one and famous one is called Binance. And this Binance basically lists all the cryptocurrencies available in the marketplace, and people can go to these cryptocurrencies and buy and sell. But keeping in mind that Binance is not a Kenyan company. So for Kenyan people to buy directly from this, we do not have options to deposit Kenyan shillings. So what would you as an investor who wants direct exposure to the underlying, to the asset itself, do in that scenario if you want to buy one Bitcoin? So here we have a set of options for how to buy Bitcoin and other cryptocurrencies in Kenya. Since we do not have many established cryptocurrency platforms in Kenya, where a citizen can make direct purchases, P2p is still considered one of the safest ways to start your crypto journey in Kenya. But unless you're buying a very, very large amount, I think P2p is the best option for you to buy crypto in Kenya. We have a few crypto exchanges in Kenya that are not very, very developed. We used to have one called BitPesa. That was the best. You could basically just send money from your Equity bank account, 500,000. Within 1 minute, you have Bitcoin. But due to some hurdles in regulation, they're no longer working in the Kenyan marketplace. I think they moved to Uganda. So we do not have established cryptocurrencies exchanges in Kenya due to the legality surrounding cryptocurrencies. And since it's still very new, the central bank hasn't started giving out licenses to sell crypto in Kenya. But in future, we will definitely get that. So for people who are also looking for a new business to start up, you could also try to see how you can set up your own Bitcoin exchange in Kenya. and you would definitely make some money out of that as a business. So that is a very, very viable business that is going to come in full swing in future. So what is a P2P platform? In a peer-to-peer platform, the buyer transfers money to the seller's account, while the crypto asset being purchased is an escrow account. Once the seller confirms receipt of the buyer's payment, the crypto is then released to the buyer's account. Examples of popular peer-to-peer platforms in Kenya include Paxful, Local Bitcoins, and Local Cryptos, and Local Monero. I think most of you have already, people who are in crypto are already familiar with some of this. And try to look at Paxful just briefly to see what it is all about. But it is basically a peer-to-peer marketplace where people can basically trade among themselves. So if you need to buy a Bitcoin, you go there, you find a trader, so this trader is selling Bitcoin. And if they're selling Bitcoin and you have Kenyan shilling, you basically open up a trade. So for me, this is currently my Paxful account. It has some balance there. You can see this is my Bitcoin. This is my Bitcoin balance. Here you can only trade Bitcoin and Tether. So let me just click on receive. So here we can see, so you can see here, we have, this is what is called a Bitcoin wallet, right? So this is, for those who have never seen a Bitcoin wallet, this is essentially how it looks like. This is a Bitcoin address. And so if I need someone to send me funds, I would copy this address and I would send it to them. And this is the address that would receive money. So this is akin to basically the public key that we spoke about, or the M-Pesa phone number that we spoke about. So this is like basically your M-Pesa phone number. You want to receive money on M-Pesa, this is what you send to someone in order to receive the money, right? So in this scenario, if I wanted to send out money, if I wanted to receive money from anyone right now in this session, I would copy this, send it to them. They would send it to this address through their wallet. So that is basically how a Bitcoin address looks like. So in this scenario, we would come here and say, hey, I want to buy a Bitcoin. And then you just click on buy. Robert, you can still hear me clearly?
Yes, I can.
Okay, perfect, good. I was just doing a mic check. So let's proceed. You can see here it says one Bitcoin is currently 2,053,000. So here you will find a list of traders who are offering to sell you Bitcoin. So I can just come here. We have different types of payment methods. So lucky for you guys, if you live in Kenya, Kenya is one of the biggest trading volume traders in the whole of Africa. We are third. After South Africa and Nigeria, we have Kenya at the top there. So we have quite some volume. So you will never lack someone willing to sell you Bitcoin and vice versa. So here we can see we have a trader, Kushi. You can pay with M-Pesa, and this is basically their rate, and this is basically their buying limit. And you can see here we have this one called Wandimi, and you can pay with M-Pesa, you can pay with Equity and Loop, and this is basically their rate, and this is their buying limit in between 5,000 to 500,000. And you can see the number of trades this trader has. So when you come to a P2P platform, you usually focus on reputation, right? You want to trade with someone who has traded with a lot of people. This, like you can see, this one is a new trader. I personally would not trade with a guy who's brand new. If I just got into the space and I want to get some Bitcoin, I would look for someone who has at least 500 trades. Like this one, I would be confident trading with them. This one, I would be confident trading with them. This one, I would be much more confident because I can see his reputation is big. So you would just click here, buy. You can see the rate. You can choose whatever rate you like. You can come here. Let's take this one as an example. We can click on buy. And here it basically asks you how much do you want to buy. So let's say, for example, we want to buy 30,000. So you will get 28,000 worth of Bitcoin, because usually Bitcoin in Kenya is sold with a markup. Remember, this is a P2P platform. They're also trying to sell it to make some profit. So usually the market rates are usually 4% and above. So this one is a little bit high. This is a little bit 6%, but this is because we do not have established exchanges in Kenya where you can purchase directly from your bank account. So with P2P, the market rate is always a little bit higher, but if you're planning to hold Bitcoin for quite a long time, a 6% is not a very, very large percentage to part with. So you would write the amount you want to pay. You want to pay 30,000. You will receive this amount of Bitcoin. It will be loaded directly to your Bitcoin wallet here. And then you can just click on buy now. So we will just click on buy now as an example to show you how this process would work. So Paxful is a P2p platform or a peer-to-peer platform. And here you would be able to trade Bitcoin with other traders directly. So you would speak to them, you would talk to them, you would engage them. If you want a reference points for who you can easily trust to trade, you can talk to me or Robert about that. We can definitely point you to the right places. And I would just say, hello, what is your M-Pesa number or bank account? So if they sent me their M-Pesa number and their bank account, I would basically be able to purchase 30,000 worth of Bitcoin, and it would immediately be loaded into my balance, and I would be having more Bitcoin in my wallet. So that is basically what someone would be able to do. But this is just a test. We're not going to purchase this right now. So if you would need to buy Bitcoin, this is the process that you would go through if you are on a P2P platform. So we have several of them. Peer-to-peer, we have Paxful, we have local Bitcoin, we have local cryptos, we have local Monero. I'm also a trader in some of these platforms. They also sell and buy Bitcoin here on a regular basis. So if anyone has some questions about that kind of business, you could definitely talk to me after the lesson. I could explain to you the ins and outs. So here you would basically make the payment, and immediately you can see they will release 0.0137 into your Paxful wallet, BTC. So once you open this trade, this amount is taken from the seller's, this guy, it will be taken from his balance and put into an escrow account. That way, when you click paid, it will be released from the escrow account directly to your account. This basically creates trust. So that is basically how that system would work. So for now, since we're not, this is just a practice, we don't want to hold his money. And then we can just cancel the trade. If you don't like the person, or you don't feel like you want to go through, you can simply just cancel. It's no problem. But that is essentially how you would buy Bitcoin in Kenya. You would just buy it from another person. You can even just walk down the street, ask anyone, hey, do you have a Bitcoin? I will purchase it from you. So that is how a peer-to-peer platform works. And we have several of them. We have Paxful, we have local Bitcoin, local crypto, local Monero. Through another session, we can go through how to purchase Bitcoin from all of these other ones. But this was Paxful, and that was the example. Yes, it's usually denominated in US dollars, but you can basically change. You can see here the value is 0.1 Bitcoin, and you can change it to also Kenya shilling. So here you can buy Bitcoin and Tether. In other platforms, you can buy Ethereum. So let's just look at one more called local Ethereum, local cryptos. So this one is for Bitcoin, but what if you are more interested in Ethereum, like Robert? Robert, I know you're a big Ethereum fan, right?
Yes, I am.
All right, so let's say Robert wants to buy Ethereum in Kenya. What would they do? They would come to localcryptos.com. They would say, view the marketplace. And, on this marketplace, this is also a peer-to-peer platform, so it has an escrow service. You can change the location. Can change the location to whatever country you're in. If you're not in Kenya, you can change the location here. Since we are in Kenya, we'll leave the location to Kenya, and it will show you all the traders that are basically selling here. So you can see this one has a limit of up to 700,000, so he's selling quite a lot. This one has a limit of up to 900,000. Then you can see here the amount of trades this guy has done. This guy has done 5,900 trades. This one has done 2,500 trades. So I would basically be able to trust one of these people to trade with them, because they have so many trades, they have traded with so many partners, and these are all Kenyan people. As you can see, they're from Kenya, Eldoret, and Nairobi. You can call them, you can M-Pesa them, you can send them equity, etc. So that's how that P2P marketplace would be able to work. So that is one of the best ways to buy Bitcoin in Kenya if you're not buying an extremely large amount. So someone would be wondering, so what if I'm buying a large amount in, where would I go if I want to buy 100 million in Kenya? I can tell you, even through P2P, you can be able to buy quite a large amount, because in Kenya right now, currently the weekly volumes of amount of Bitcoin being traded is close to the 500 million range weekly. So whatever amount of Bitcoin you would want to buy, I would guarantee that you will mostly find the liquidity. So no one should be able to worry that, oh, what if I buy a Bitcoin? How am I going to cash out? What if there's no one to sell the Bitcoin to? So for people who had that fear, I'd like to alleviate that fear and tell you that we have enough volume. We have enough liquidity, especially in Kenya. We have a lot of interest in cryptocurrency in Kenya that you will always find someone to buy Bitcoin from, and you will always find someone to sell Bitcoin to. So that should be the least of your concerns. So just to show you a bit of statistics here about the current volumes in Kenya. Let me just go to Coindance, and then I can show you so that you can see practically what I mean. Because I know that is a real fear. You know, it's like buying a stock and then you have nowhere to sell it because the price is maybe, there's a lot of volatility and no one wants to buy your stock, right? So we can see here, let's go to volume. We have here the two major P2p platforms. We have local Bitcoin and we have Paxful. So we can look at both of them just to get a bit of an idea how much volume is being traded in Kenya. That way you can alleviate any fear that if you buy, you might not have anywhere to sell it in order to get your money back. So let me scroll down to Kenya. Right, so here we can see the statistics, and this is a weekly local Bitcoin volume. I don't know if I can zoom it in. Right, Robert, can you see my chart clearly?
Yes, I can.
All right, so we can see here, this is a weekly local Bitcoin volumes, Kenya shilling on a Coindance. This is basically a cryptocurrency statistics website. So we can see it started all the way from 2013. There were no people trading. It went to 2014. This is when I also got into the space. 2015, it started to pick up. And then we can see 2017, there was a peak. All the way to 2020, there's a peak. So all this is volume, and this is the volume in Kenya shilling. So we can see currently the volume in Kenya shilling is about 113 million weekly. This is the amount of money in cryptocurrency being traded in Kenya. And this is only one platform. This is local Bitcoin, Kenya. So when we go and look at Paxful Kenya, we can see also the statistics here. And here it's quite high. You can see this last week, people traded 190 million in Bitcoin on Paxful in Kenya. So you should not have any fear of where you would cash out. You will always find someone to sell your Bitcoin to. So these are the kind, at some point you can see it also crossed to the 300 million weekly threshold. But right now it went down to 190 due to, to the volatility nature of Bitcoin. This is what usually happens. But with this kind of volume, I think it would satisfy most of the people who want direct exposure to the asset itself. And so with this kind of volumes, you should not be worried that you will not have anywhere to cash out. So I think that satisfied that curiosity. And this is for Paxful volume. And this is a weekly volume for cryptocurrency being traded in Kenya. So this is some of the useful statistics you can always have at hand in case someone tells you, what if you buy and you have no one to sell to? You can show them, oh, look at the statistics. We have a lot of people who are trading, so there's always someone to sell to. All right. So Robert, you want to take a short break and then we can come and start tackling cryptocurrency exchange? Because I can see we've done an hour and a half here.
Yeah, so you can take a 5-minute break and resume at 5 minutes past 11. You grab some coffee, relax, and join us in 5 minutes time.
So we can meet back in around 11:36. I can see it's 11:31, so we meet back in 11:36. Yes.
Yeah, sure.
All right. See you, everyone. And in case you have any question, I will be answering them after the break before we proceed.
Thank you.
All right. All right.
welcome back, everyone. So if you're back, just type there on the chat that you're back so that you can know. And Jack, you can kindly share your screen and proceed. So thank you, I can see you are back. So today we are just getting started, so learn as much as you can. So it is a journey. In our community, usually say that learning is a journey. So day one, even if you get out of here with just definitions and the general know-how, that would be good enough. Yeah, so we are in this journey together. So Jack, you can take it away. So if you are from the traditional investment world, like most of us, so this is just the beginning, and we hope to get an exposure to Bitcoin and cryptocurrencies. So just a minute, I hope Jack can connect. So as you wait for Jack to connect, so I believe you've seen the kind of volumes that are there. So in regards to cryptocurrency trading, it just means that there's an opportunity for that segment to grow. And it is also a matter of time before the local exchange, or even if not here in Kenya, globally start recognizing cryptocurrencies. Yeah, so Jack, kindly proceed.
All right. All right, so I hope majority of the people are back.
Yes, yeah, so you can.
All right, so as a refresher, maybe you can answer 3 more questions and then we can jump into it.
Okay, so we have a question from Brian. He's asking, can you access your wallet with VPNs? So VPNs are basically virtual private networks. I think those who are in the diaspora, they understand this better, especially in countries where they block WhatsApp and things like Facebook. So you have to use some IT stuff known as virtual private network to access such services. So he's asking if you can use VPNs to access your wallet.
All right, that's a good question. So yes, you can use a VPN to access your wallet or any other website for that matter. It is not usually a problem. Most of the wallets discourage using a VPN. I'm not sure because it's a security issue, but most of them have no problem with a VPN. So basically you can access your wallet by using a VPN, yes.
The next question is from Alex. He says, okay, I think he's left. So maybe these are the questions that we'll write down and answer. So he says that he wants us to talk about scams. I think that is coming. Then Sharon is asking, are there any demo accounts or is it just live trading accounts?
All right, so I think she's asking in regards to Etoro. In Etoro, we have demo accounts, so you can practice your trading with demo accounts or paper accounts.
Yeah, so we do have demo as well, yeah.
Yes. Any other question?
Yeah, someone is asking, please explain what a buying limit is. So I think this is just something that a trader can say. Like, for example, I can say that if you have anything less than 50K, I won't be selling to you. So people can set that limit. So I think that answers that. Then Mike is asking, he's heard about the term mining. So what does that mean? So I think that's coming as well, right?
Yes, so I think that's a very, very important question you asked there, Mike. I don't know if he's in the session so that we can answer it while he's still here.
Yeah, he is here.
All right, perfect. Here, okay, let me see. All right, so Mike, I will ask you to hold on to that thought because we have mining as part of this class today. So I will explain what mining is down there and why it's important for you to just know and understand it. So for now, let's proceed here with lesson 2. And here we're going to see what is a crypto exchange. So a cryptocurrency exchange is an online platform in which you can exchange one type of digital asset for another based on the market value of that asset. Example, we have Binance, which is the largest cryptocurrency exchange. We have Bittrex and we have Poloniex. So here, if you can see my screen, Robert, can you see my screen?
No, we can't. So kindly share.
Pardon?
You can share your screen.
All right. Sorry. Let's do this. All right. Can you see it now? All right. Perfect. So here we have Binance, which is considered to be the largest cryptocurrency exchange in the world currently. And from this definition here, cryptocurrency exchange is an online platform in which you can exchange one type of digital asset for another based on the market value of that given asset. So we have 3 examples here that are very popular. We have Binance, we have Bittrex, we have Poloniex. And the biggest one is Binance, and this is what I would recommend for people who are starting out. The interface is fairly simple to use, and you can come here and you can basically trade different cryptocurrencies. So if you come here and you want to trade Bitcoin for Ethereum, you would basically be able to do it very, very simply here. So we have a simple platform and we have a more complex version of the same platform. But for the simple platform, this is basically what it would look like. You would have basically 1 Bitcoin here, and you want to trade this 1 Bitcoin for something else. So, for example, let me just start with Bitcoin. So you have 1 Bitcoin here, and you want to trade this 1 Bitcoin for Ethereum. So you would say, I want 1 Ethereum, from 1 Bitcoin to 0.1 Ethereum. I think I don't have balance in this account, so let me just add the balance it's suggesting so that we can have a more practical example. It's not filling in the details correctly, but if we had a Bitcoin balance in this, it's because I'm not logged in. Okay. So basically this is the interface and how it would look like. So if you're trying to exchange one cryptocurrency from another, and this is basically the basic platform, you would simply come here, say, hey, I have 1 Bitcoin, I need 5 Ethereum, and you would preview the conversion and you'd basically say convert. So that is how that transaction would happen. It would be direct and simple. But if you're someone who likes trading, there are different options where you can go and trade cryptocurrencies in the same platform. But for someone who's starting out, I would recommend this simple and basic interface. You just come here, you choose the type of cryptocurrency you have. If you have Ethereum, you choose Ether from 2. So from Ether, you can go to all these other cryptocurrencies listed here. So if you want XRP, just click on it and it will show you the conversion amount. And for people who are more advanced traders in this class, this is the platform that basically you would be able to access. So this platform is for a little bit more advanced traders, but you can see all these different assets listed here are cryptocurrency assets that you can trade on the Binance platform. We have some that are listed against Bitcoin. So we have different kinds of markets. We have Bitcoin markets, we have Ethereum markets, we have USDT markets. So people who are advanced traders, I think we will tackle that on another class. But for people who are advanced, this is basically the platform that we would use to do all your trading, essentially. So this is where, back to this, what is a cryptocurrency exchange? This is what you've seen. This is basically the definition of a cryptocurrency exchange. You will deposit money here and you will be able to get exposure to all these other cryptocurrency assets that we can see on the right side of the page here. So it's basically an online platform which gives you in which you can exchange one type of digital asset for another based on the market value of that asset, right? So how to purchase crypto on Binance. This platform that we're on is called Binance, so you always need to go to binance.com. And firstly, make sure you need to have either BTC, Ethereum, or USDT, as these are the cryptos listed with the most trading pairs available. So by that, I mean is that first of all, you need a cryptocurrency balance because this is a cryptocurrency platform. So in this cryptocurrency platform, you would either need Bitcoin, you would need Ethereum, or you would need USDT. Because you can see here, this is a USDT exchange. You can see everything here is listed against USDT. This is DOT, USDT, DREP, USDT. So that means you can get more exposure if you deposit USDT here. And when you click BTC, you also see here everything BTC markets against BTC. So it would mean you would get more exposure if you deposit BTC here. Same for Ethereum. Right, you would get more exposure if you deposit these three major ones, which are Bitcoin, Ethereum, or USDT. But if you deposit any other smaller market crypto, they do not have markets listed, you would not get such a huge exposure. So you just need to have either Bitcoin, Ethereum, or USDT for a start. That is at least what I would recommend, right? So how to purchase crypto on Binance. This is what you would do. You would get your BTC, Ethereum, or USDT, and then you would go ahead to make a deposit. So you would make a deposit by copying your BTC wallet address on your Binance account. So once you're logged into your Binance account, I'm not logged into mine on this one, but for practicality purposes, maybe I will log in. And let me just log in very quickly, so that anyone who's never done this process can see how simple it is, and they can also try it themselves. So this is a two-factor authentication. This is also something we shall go through in terms of security of trading. You always need to have a Google Authenticator or another application called Authy that will help you to keep your online account secure. Because remember, this is a centralized wallet. This is not a decentralized wallet. These guys hold your private keys for you. Any exchange that holds your private keys for you is not considered 100% safe, because if something bad happens to the exchange and they're closed down, what's not to say that they will just disappear with your money, right? I mean, they have rules and regulations to follow, so they most likely will not disappear with your money, but it can never be 100% safe. So you always need to, this is why we have hardware wallets and software wallets where you can store your own funds rather than on exchanges. This is what most professional traders do, including myself. Anything above $2,000, I would rather just have it stored on my personal wallet. So here you would come and go to a wallet, you would click fiat and deposit. Yeah, and in this scenario, we have so many different assets here that you can basically deposit. So say you bought some Ethereum from local crypto here, right? And you want to send it over to Binance. So what would you do? You would come here and you would search Ether. And you can see we have Ethereum. And when you go to the last option here, we have buy, deposit, withdraw, trade. So you would click on the deposit option, right? And this deposit option, it would give you a wallet. So this is basically the wallet that you're going to deposit in. This is basically your public key. This is what you give people when you want to receive money. So you can see it says send only Ether to this deposit address. So you cannot send any other cryptocurrency. So an Ethereum wallet can only receive Ethereum. It cannot receive Bitcoin, Litecoin, or any other cryptocurrencies for that matter. So just as a quick example, check out the Bitcoin one, see how it looks like. So here we can search BTC. And here we have a deposit option. I went to wallet, fiat and deposit, and then I have all of these options. So for Bitcoin, it also gives you another wallet. So this is basically the wallet address for your public key in cryptography language. So this is what you would send to another person in order to receive Bitcoin. So let's say you already bought some Bitcoin on your Paxful wallet and you want to send it You would come here to your wallet. You would come to Binance, copy your wallet. You would come here to Paxful as an example, and then paste your wallet. And that way you'd be able to transfer funds from your Paxful wallet directly to your Binance wallet. So this is basically from a P2p platform, the one that we spoke about, where you're purchasing, to a cryptocurrency exchange where you want to go and get exposure to other cryptocurrencies that are in the marketplace. So here, how to send a transaction. I'll just click on send, and then it will tell me to enter the amount, and then it will ask me if it's another Paxful user or a Bitcoin address. I will add here the Bitcoin address, and I would say 0.01, and I would say continue. So you can see here they even give practical examples and say a Bitcoin address looks like this. So this one is yours. So this is basically what a Bitcoin address looks like. This is your public key. This is what you give to other people in order to receive a Bitcoin, and you would just say continue. And it's basically just like sending money from your bank account. So currently I would pay quite some money because the network fees in Bitcoin are high. But if I was sending Ether, I would pay a much lesser amount. Ether would be less than $1 probably. But for Bitcoin right now, because there's a lot of volatility, you find that the fees are currently very high. This is why they usually give someone a warning. But if you wait for a couple of hours, you will find that the fees has dropped from $9 as it is to maybe $4 and below. So that's basically what I will need to send Bitcoin from my wallet. I'll just need a Bitcoin address. So I would get the Bitcoin address from my Binance account, and I would put it in my P2P account, and I would send it from my P2P account to the cryptocurrency exchange. So that's basically how that whole process would go by. Right, I don't know if you have any question concerning that cryptocurrency exchange and how it works and how to send money to it. Robert, do you have any question regarding that?
None that I can see here. So Dismas is asking, is the point to trade with each other, or is it to pay for something else?
All right, so we have different reasons why people basically buy cryptocurrencies. So we have people who are professional traders. They've been trading stocks, they've been trading forexes, and so they just want that same trading exposure in cryptocurrencies. So we have people who want to do trading, right? We have people who trade in order to make profits, thereby meaning they buy Bitcoin low and they sell it for a markup. They make money that way. And then we have other people who want to pay for goods and services. There's a lot of goods and services nowadays that you can pay by Bitcoin, right? There's a lot of Bitcoin marketplaces nowadays that you can go. I don't have an example currently, but we have quite a good number online where they accept Bitcoin as a means of payment. Even there's also like a shoe shop on Spa Mall along Thika Road. They also accept Bitcoin as a form of payment, right? So if I wanted to buy a shoe there, I would just come buy some Bitcoin there and then pay the guy for a Bitcoin. That's what I would do. So we have different reasons for people to buy and sell services. I also offer cryptocurrency consulting services myself, and I exclusively get paid in cryptocurrencies. So for someone like me, I would not usually accept Kenyan shillings, especially if it's from an international client. I would rather you just pay me in crypto. So for someone like them, they would have to get crypto in order to pay for a service, right? So that is one of the reasons why people interact with Bitcoin and cryptocurrency as a whole. So how to purchase crypto on Binance, I think I have given quite an example there. And after you make your deposit from your btc.com wallet account, anyone who will have a problem opening this can contact me. I will share a tutorial on how to do that. All right, so we have something here. We say make use of blockchain tools like the Bitcoin/Ethereum Explorer to track your transactions as they get confirmed on the blockchain links below. So what happens when you send one Bitcoin from one address to another, or one Ethereum from one address to another, right? That's the question that most people have in their mind. How do you know it will go to the other side? Because that was my biggest fear when I was actually starting out my crypto journey. Like when I sent out my first Bitcoin, when I started trading Bitcoin, the price was around $200, $150. and still it was a lot of money. So I was like, if I send this, how am I sure it will turn up on the other side, right? So we have facilities and we have tools to help us track transactions on the blockchain. So I think we shall share these tools later on in the class, but basically it shows you how the transaction that you sent is going. Like you can basically track any transaction on the blockchain. So we shall look at something called an Explorer. An Explorer is basically a tool to help you track transactions as they happen on the blockchain. So we shall be looking at the Ethereum Explorer because it's simpler to look at. So let's just try and find an address I regularly use. So this is what we would call essentially an Ethereum Explorer. So this is one of my wallets that I basically use. And here we have an Explorer for Ethereum. And basically you would come, paste in your address here, and you can see all the transactions that have ever taken place in that address. Remember, in the beginning of the class, we said the cryptocurrency network is completely decentralized and all records are public. So anything imprinted into the Bitcoin blockchain, it is basically, or Ethereum block, it is basically permanent and it will stay there forever. So you can see any transactions that I did from 246 days ago or beyond, and we can look at this. So any transaction that has ever happened in the blockchain, it stays there permanently. Why? Because each and every transaction is related to the next transaction, unlike M-Pesa. So here you can see that this was the timestamp, and it was 246 days ago. And I sent funds from this address to this address. It cost this much. Oh, sorry, the value was this much, and the transaction fee was this much. So you can see for sending 3,000 shillings, on Ethereum, it costs me only 2 shillings. I don't know how we would quantify that in M-Pesa, and even tells you the price of Ethereum 246 days ago was $169 per Ethereum, right? Right now it's a little bit higher. It's I don't know if people check just to give a point of reference of why people buy crypto. So 240 days, that's barely a year, right, Robert?
Yeah, so it's a few months, like 8.
Yeah,
Right.
so yeah, like the price of Ether then was $169, right? And currently the price of Ethereum is $500. So it almost basically tripled the value. But basically, you can see the transaction just stays on the blockchain forever. It shows the money went from this address to this address. The value was this amount. The transaction fee was 2 shillings. This is $0.02. And it basically stays there forever. So this is how a transaction would look like on the Ethereum blockchain. This is the Etherscan, and if you want to search anything on the Etherscan, especially your address. So if you sent money from one Ethereum address to the next, you simply come, post the address here, and search it. And then it will show you how the transaction is going on, how the confirmation is working. If it's going to get stuck, if it's going to get through, it gives you estimations of all sorts. It even shows you the kind of asset you're dealing with. Like I was dealing with OMG in this case. So it is very transparent. It is very open. It is basically programmable money that is on the blockchain. So this is one of the technologies that is good. This is basically like the bank showing you how your transactions, how they're storing your transactions, how they're executing your transactions, like where your money is going after it gets deposited. That is just stay as numbers in your bank account, or they move those exact pieces of notes to someone else's bank account. So this is basically what it shows. It shows, you can see even we have 852 days. I don't know, maybe this is 2018, right? So it has the transactions from all the way from 2018 to currently, which is 2020. So everything on the blockchain, as you can see via this demonstration, is exactly permanent. So any transaction that took place here will stay here and it will stay there forever. So anyone who wants to change this transaction will have to change the whole network transactions in order to be able to change this one transaction, right? So this is why the Bitcoin network and the Ethereum network is considered to be very, very secure in terms of the computing power that is running it, right? Because you cannot easily change transactions due to the decentralized nature. Like if you want to change the transaction, you will have to go to a guy who is hosting a Bitcoin node in China, change his transaction, to a guy in Australia, change his transaction, to to a guy in Nigeria to change. You have to change the whole Bitcoin blockchain, and that will be very, very time consuming and very, very expensive. So this is what makes Bitcoin technology to be very censorship resistant, because of the nature of computing power it has and the decentralized nature of it, and the publicity also, because here the transactions will always be permanent, as we've demonstrated. So any question on that, we can basically answer. So these two links you will be provided. Thereby, when you send your Bitcoin from one address to another, you can basically come here. You can just post the address. If it's an Ethereum address, if it's a Bitcoin address, here is where we would go. You just see so I can copy, this is my Bitcoin address, just to give more illustration. I can copy my Bitcoin address, and this is also a Bitcoin Explorer. As you can see here, it has the word Bitcoin Explorer. This is basically a place where you can track your transactions as they happen, or the history of your transactions, because everything is permanent here. So when I put in my Bitcoin address there, I can basically see Bitcoin and all the transactions that have ever taken place in this specific wallet. So I can see it did transactions. This is the total receipt, this is the total sales, this is the final balance. And I can see all the different transactions that came in and went out. I can see all the different transactions that came in and went out. So this is just transaction data that is being verified on the blockchain. But basically, this is a tool that will help you to track your transactions. So if a new transaction came into this wallet, I would be able to see the transaction here. Right? Like you can see, this one is 2020 on which date? This one, I think it's on date, this is date 11. I think it was like 1 day ago. And this is the transaction that took place. So any new transaction, this is where we'll be able to see the transaction. So this is a very important tool to always have in your arsenal for when you need to track transactions. All right, so I think a lot of people are also asking themselves, so basically now that I'm in this space, how do people actually make money with cryptocurrencies? So this is the easiest or the simplest form is to basically buy and hodl. This is one of those unique words that are just used in crypto, and due to the volatility nature of cryptocurrencies, people tend to say hold on to dear life. So if you're basically buying Bitcoin, you just buy and hodl. You just hold on to dear life and hope the price keeps going up. That's just one way to do it, or one way people make money in this space. The other one is the mining. So I think somebody wanted us to explain what mining is. So this is how mining works. Mining is the process in which miners use powerful computers to solve complex mathematical problems. When they find solution, they are rewarded with newly minted BTC. All right, so case in point, back to this Bitcoin Explorer here. So we can see here we have a transaction hash, and it has quite a lot of data, right? So where does all this data come from? Who verifies these transactions? Who makes sure that this amount of money was actually sent from my wallet to the next wallet? Like, who maintains this distributed ledger of data? So we have a group of people called miners, and basically their work is to verify transactions on the Bitcoin blockchain, and they get rewarded, right? So by verifying the transaction, they don't do any physical work. They basically have powerful computers with powerful graphical user interfaces. And so what it does is those computers solve complex mathematical problems on the blockchain. The blockchain gives those computers complex mathematical problems. After their computers find a solution, they are then rewarded with a Bitcoin. So this is how new Bitcoin comes into the ecosystem, right? And we can see on the cryptocurrency here, let's just click this. This is CoinMarketCap for anyone who had forgotten before the break. This is like the Nairobi Stock Exchange of cryptocurrencies. This is where everything is basically listed. Basically, Bitcoin is a fixed asset in terms of supply. The maximum supply for Bitcoin will always be 21 million. So there will only be 21 million Bitcoin in existence. So currently the total supply is 18 million. And the miners who help to verify transactions like this ones on the blockchain, all this data is coming from the miners. They verify this transaction, this transaction, this transaction, and then they bundle them up in one block, right? And then they send this block to the blockchain, and it tells everyone, hey, I verified this transaction. And then if everyone confirms, oh, okay, he did, and then they will get paid a certain reward. And this reward is paid out in Bitcoin. Right? This is where the term blockchain was derived, because the miner basically bundles up transaction in a block, verifies them, and then gets rewarded. So a miner is just someone who has a computer with high processing power. They plug it into the Bitcoin blockchain. It solves complex mathematical equations. They get rewarded by Bitcoin, and that is how new Bitcoin is introduced into the ecosystem, because we will have a maximum supply of 21 million Bitcoin. So right now we have 18 million. So where did this 18 million came from? It came from the miners who are doing the work of verifying transactions on the network. So the more they verify the transactions, the more we'll have the Bitcoin here. But as time goes by, it is imprinted into the code as the monetary policy, right? So the monetary policy of Bitcoin is that the difficulty of doing the mining, the difficulty of verifying transactions will increase, right? So when the difficulty increases, we will have less and less and less Bitcoin circulating in the marketplace, right? So it is estimated that we will get to 21 million, maybe in, I don't know, was it 30 or 50 years from now? Because the difficulty to mine Bitcoin will increase. Right now, the difficulty, I'm not sure what's the rate of difficulty, but as time goes by, the difficulty basically increases as we get closer to the 21 million. So there will be less and less and less Bitcoin being minted out. And this is what prompting the price of Bitcoin to go high, because the supply is what? Capped. Unlike the US dollar or the Kenya shilling, where we don't actually know the amount of US dollar in circulation. We don't know if there is a maximum supply. They just keep printing and printing and printing more. I heard that this year alone, around 30% of the total US dollar in existence was printed this year alone. So you can see that's somewhat of a very inflationary currency, because it doesn't have a maximum supply. So one factor that makes the price of Bitcoin to go up is what? Is the max supply. So as long as the max supply stays constant, you will find that the demand for Bitcoin can easily go up, because people can predict the monetary policy, because the monetary policy is put inside the code. We can see it is open, right? So that is one concept of how to understand how Bitcoin got from $0 to $18,000 in a short period of time of less than 10 years. So that is one way. I hope I have answered your question. Was it, Brian, about the mining process? And then we have buying and holding, we have mining, and then we have trading. So I think we've spoken enough about trading on Binance. So if you want to trade different cryptocurrencies and whatever they offer you think is valuable to the marketplace. For example, Ethereum, we can share the value proposition of Ethereum. Ethereum is trying to solve a problem that Bitcoin, you will start to notice that all these other cryptocurrencies are trying to solve a problem that Bitcoin did not solve initially, right? So for example, Ethereum has introduced smart contracts into the blockchain. Right now, currently, Bitcoin cannot execute smart contracts on its own blockchain. So Ethereum thought, hey, this is an opportunity. Let me come up with a project that will put smart contracts on the blockchain, right? So someone else can decide, hey, I want to put insurance on the blockchain. So they can come up with their own cryptocurrency project that puts insurance on the blockchain. So this is why we have so many cryptocurrencies, because each of them is trying to solve a specific problem that Bitcoin has not solved. But none of them is trying to become a monetary reserve. None of them is trying to become a medium of exchange apart from Bitcoin. So that is what sets Bitcoin apart. Bitcoin is trying to become a medium of exchange and a store of value. The rest are trying to solve other problems that Bitcoin was not able to fulfill, right? So that is that. Talking about the value proposition of cryptocurrencies, that is what we can get to understand. I don't know if we have any question regarding the Blockchain Explorer before we proceed to the other topics. Robert?
So Just a minute.
All right, we can take 5 minutes and see if we have any questions. And then
yeah, someone asking if cryptocurrencies are simply a form of investment. I think that one you already answered.
Yeah.
So there are going to be different use cases on how people look at cryptocurrencies. So Juliet is asking what a USDT is in full.
Oh, a USDT is a cryptocurrency that is pegged to the dollar. So this cryptocurrency will always have a value of $1. So I will give you an example here. You can see here we have the 24-hour change in terms of value, right? We can see Bitcoin changed 3%, Ethereum 2%, XRP 5%. We have some, if we even click, if you click this 24-hour change, you can see some changed 18%, 10%, quite some big values, right? So when you come back to USDT, USDT is a cryptocurrency that is pegged directly to the dollar. So its value will always be $1, right? So USDT in full means US dollar tether. It's basically tethered to the US dollar. So its value will always be equivalent to that one of the US dollar. So this is that's why it's called the tether, USDT, US dollar tether. Its value will always be $1. So people use this cryptocurrency to take profits. So let's say you bought Ethereum from $100 and right now it's $500, right? So maybe you made a profit of $400, but you don't want to keep Ethereum. You don't want to cash out to Kenya shilling. So you can simply just buy the US dollar tether, because the value of the currency that you put there will always be the same. If you put in $300, it will always remain $300. So that is the value proposition of this specific cryptocurrency called Tether. And we have so many others like it. That is just one example of one that is directly pegged to the US dollar. Yeah, so I hope that answers the question.
And then Brad says that he has a question on Explorer, on Ethereum Explorer. So just a minute.
No problem, we can wait for him to ask his question.
So, Brian, you can go ahead. I've unmuted you.
Hi, Jack.
Yes, hello, Brian.
Can you please go back to the Ethereum where you were, yes, the Etherscan. There's something I saw.
Yeah.
On, I think it's in terms of how miners can confirm the number of transactions.
Okay.
How they can confirm this up here on block. There's 159178 block confirmation. What is that?
Okay, so this one, let me just see, 1, 2, 3. So on this specific block here, let me just see. Okay, so let's just read this brief instruction here. It says the number of the block in which the transaction was recorded. Block confirmation indicates how many blocks since the transaction is mined. So basically, what I think this number is basically how many blocks have been previously mined before we got to this specific block. Do you get me on that one? Yeah, so this is basically the number of all the previous blocks that have ever been mined until they got to these specific blocks. So this is about 9.8 million blocks that have been mined until we got to the 969th one. So this is like the 969th one. Yeah, so this is basically that number. So I think you remember from the explanation that one block basically consists of several transactions bundled up into one block. This is why it's called the blockchain for that specific nature. Does that answer your question?
So it's essentially before you go to that transaction.
Yeah. Correct. That is the number of transactions that have been mined previously. These are the previous blocks that have been mined on the Ethereum blockchain before we got to this 969 number. All right, thank you. Thank you for your question. Any other question?
So I can see most of the questions have been answered, unless anyone has got another question.
We can give it one more more minute. If you have any question, guys, you can formulate it right now. You can look at this document here. We can ask any question about the Block Explorer. You can basically ask any question about cryptocurrency in general, how to purchase, how to buy, how to sell. We can give it the next 1 or 2 minutes for you to come up with a question that you feel like hasn't been outlined clearly. We were just curious about any question in general. We can tackle it right now before we proceed to the next topic.
This particular page you're on,
Yes.
just scroll down, I can see something on difficulty. I think I'll click to see more. There was something I saw on difficulty.
That might have been this one. I'm not sure if I have it. Or this one.
Yes. What does that mean?
So I think I will refer you to the coin here. Have a clear understanding. It still works the same way. I'm offering a reference. I'm jumping in between Bitcoin and Ethereum because the blockchains simply work the same way. They're all proof of work blockchains, meaning miners have to do the transactions of they have to do the work of verifying transactions on the blockchain, correct? So the difficulty rate we are seeing here, this is just a number representing the amount of difficulty it takes to mine one block. So this is the total difficulty that has ever been or will ever be in existence. And this is the current difficulty that was experienced when verifying this specific blockchain transaction. So this difficulty will eventually get to this level, and that's the maximum it will ever get to. And the blockchain will have to change from that into another form of transaction valuation, right? So this is the difficulty that was experienced by this specific miner in verifying this specific transaction. So coming back to this, right? You remember the 21 million maximum supply? Currently, we're at 18 million. So the difficulty tends to increase the closer you get to the maximum supply. And the difficulty increases so that it basically keeps the prices level. Like that is basically an economic policy, right? The less the supply, the more the demand of your product, correct? So in this scenario, that is a monetary policy that was embedded into the Bitcoin blockchain that says we will have a maximum supply of our currency. And the closer you get to this maximum supply, right now we're at 18 million. It seems very close, but it is so far away. Estimations estimate this to go up to 2050. Some people even estimate it to go up to 2100. So we will be lucky if we see this in our lifetime, right? So this is also one very, very interesting concept that the closer you get to the 21 maximum supply, which is a monetary policy that was embedded into the Bitcoin blockchain, the difficulty increases. This thereby reducing the amount of Bitcoin released into the marketplace. So the miners will find it more difficult to mine Bitcoin. They will have to do more work to get a similar amount of Bitcoin they got maybe 5 or 10 years ago, right? So this is why, and the blockchain basically carries all this information. It carries all this information. Anything you've ever transacted, the day, the time, the difficulty, the number of blocks, the transaction fees, the transaction hash, the gas limits used, it basically carries this transaction. So for anyone to want to alter the blockchain, they have to alter each and everyone's transaction in order to be able to alter the blockchain or to take over the blockchain or to hack the blockchain, so to speak. So this is why the security of the Bitcoin blockchain and the Ethereum blockchain is considered to be one of the best, because of that difficulty nature, that decentralized nature of how the transactions are verified, and they're immutable and they're permanent on the blockchain. Just to answer your question.
That's good, thanks.
All right. Any other question? You can tackle it right now.
I think Mary asked for the links for blockchain or Etherscan explorers, and I've shared that on the chat.
Perfect. Any other request? Any request? Anything that you feel like you've never known about cryptocurrency? This is the best time to ask. Don't consider there's no bounds, no limits. Anything you've ever wanted to know, any question, even if you were in Bit Club and you were wondering what happened to, this would be the best time to ask. We can basically tackle those issues on a person-to-person basis, no problem. You can give it one more minute to see if we have anyone also raising a question.
There's a restaurant in Nyeri that accepts payment in Bitcoin.
Yes.
If you're familiar with them.
Yes. She's a very, very vocal person in the blockchain space. We're very familiar with her.
So that primarily just using it as a means of investment, or it's just to popularize the.
Well, I would say first of all, she's a good marketer, right? And then also, cryptocurrency space is like a different industry, right? We have other industry players in the crypto space. So you basically want to tap into the crypto space and you say, oh, all right, I see there's a lot of crypto people and I see maybe they make quite some money. So how will I sell my products to them? And she's like, okay, let me start by just accepting their currency, which is Bitcoin. So she's basically trying to tap into the market of people who trade crypto on a regular basis. That's how I would put it. And she herself, I think she also mentioned she's an active cryptocurrency trader. So from the fact that she's an enthusiast like myself, and she's running a business, she's like, why don't I accept something that I'm more enthusiastic about? So if you're more enthusiastic about Bitcoin and not the Kenya shilling, as a business person, you can make the decision to accept Bitcoin, right? Because Bitcoin is a deflationary currency. By a deflationary currency, I mean its price tends to go up rather than down. Like the Kenyan shilling, I mean, I saw someone posting on WhatsApp, it's reached 117. I'm not sure if that's true, Robert. That would be very alarming.
Yeah. It's like now we have a dual market, and we are still not ready to face.
Yeah. So if the value of the Kenyan shilling keeps on going down because we do not have a maximum supply, they will keep printing and printing and printing more of it. So if you want to hold a deflationary currency, right, your 100 Kenyan shilling in Bitcoin will be worth more 10 years from now than your 100 shilling in Kenyan shilling in government money. So if you want to hold a deflationary currency, Bitcoin could be one of the options for you, or any other cryptocurrency out there that has the same attributes. So it's just that if she was a business owner and she decided for several reasons I've explained, could be marketing, could be she wants to tap into the crypto market because we have a different industry and different people there, could be a crypto enthusiast who wants to accept a deflationary currency rather than an inflationary currency, and that kind of nature. I hope that answers your question.
Yeah, I think that's it in terms of questions.
Good. So we can go into the different ways of making money with cryptocurrencies. We can just start with the first one, even though we went through this before the break, is buying and holding. So anyone who bought Bitcoin maybe 10 years ago, right, in January 2014, this is about when I started trading. I think I started in 2014 around January. So the price was always around $200. So if I held my Bitcoin from January 2014 to now, that's some one Bitcoin that cost 20,000 Kenyan shilling back then will be costing around 1.8 million right now. So that's basically the buying and holding strategy. So you find a crypto that has a low market price, you basically buy, hold, and if the price goes up, you basically make a lot of money, right? Same to stock. It's basically like buying a Tesla stock. The Tesla stock was still in the $5 range like back in 2010 or before that. 2008, I think it was trading around $5 or $20. So if you just buy a lot of it, hold, and if it goes up in value, you make a lot of money. The second one is mining. This is the process in which miners use powerful computers to solve complex mathematical problems. When they find a solution, they're rewarded with newly minted BTC trading, with newly minted Bitcoin. So this mining process used to be simple. Before in 2014, maybe you could do some mining at your home. But as time went by, the mining became so lucrative that we have large people and large investors that got into the space and bought up all the mining equipment. And it made the prices of mining equipment to go really high. And the mining technology also changes so quickly. So this is basically a game for the big boys. No one right now can tell you easily that you would be able to make money in mining. We have other miners that offer cloud mining services. They have their own computers that are as powerful as the ones that the big boys use. And they tell you, hey, you can buy a space in my computer and you can do mining, but I don't know how you would verify that they have given you space. That is also another conundrum there. But basically that mining process, I don't know if we have an example of a video. Let me just try to search this on YouTube, and then I will also share the link here so that people who have never seen how a mining rig looks like or a mining warehouse looks like, they can be able to see this. Because that way you would understand what I mean by when we say computing power. When we say Bitcoin has the largest computing power in the whole world, I mean, someone might be wondering, what exactly do we mean by computing power? So let's just see an example here. BTC mining warehouse in China. So I know you can't see from the whole screen here, but this is one of the videos that was done 5 years ago. This was also what helped me to fundamentally understand how the Bitcoin blockchain is very, very secure. So I don't know if I can just zoom in quickly just to give everyone a visual of how it would look like. Robert, you'll tell me if you can see my screen in full.
Yes, I can.
Right, so basically this is how a mining warehouse looks like. So you can see it's tons of wires and tons of computers. They just do the work of mining Bitcoin all day and every day, right? So you can see it's a very expensive game to get into right now. And there's a lot of this, you can imagine this is 2014. So you can imagine how it looks like in 2020, right? It is probably super advanced, and the technology is so advanced. They probably don't even use the same machines that we are currently seeing on this video. And these machines, all they do is mine Bitcoin all day, right? So they solve the complex problems on the Bitcoin blockchain, and then the blockchain pays them the reward for solving this complex problem. And that complex problem is what bundles up the transaction into one block and verifies it and publishes it on the Bitcoin blockchain permanently, right? So this kind of computing power is in China. We have people in the US doing mining. We have people in Africa. We have people in Europe. So shutting down Bitcoin would mean shutting down everyone who is doing mining, right? And that is, it's quite preposterous and close to impossible, because not all the same countries have the same views about mining, right? There's some countries that enjoy, they want this economic activity to thrive. There's some countries that, you know, they don't want this economic activity to thrive. So people will always take advantage of different economic policies and how their countries work. So recently I saw that the Iranian government is basically buying Bitcoin. The Iranian central bank is buying Bitcoin from the Bitcoin miners in Iran. So you can imagine the kind of computing power they also have in such kind of a country, right? So there will always be someone mining Bitcoin as long as it's economically viable. So they made a lot of money doing this, but they also invested millions and millions of dollars to set up something like this. So that is basically how the Bitcoin mining process looks like. I will share this link. It helped me 6 years ago in my Bitcoin journey as well. So Robert, I will put this link here. People can just watch it. Then they can be able to get a clear understanding of how the whole mining process works. All right, so I think the next one is trading. I think we've extensively spoken about trading. We have different kind of trading, right? I will show you the kind of trading that is a little bit more common. Let me see if we have it on the list here. All right, so the trading that is more common is what we spoke about in Binance, right? You basically are a trader, you've done trading, you have experience in trading. You will come and buy the price of Bitcoin when it is 17,600. You will sell it when it is 18,400, wait for it to come back down again. You know, that volatility, that day trading. If you've ever heard about day trading, yeah, this is something you can explore, because that would be a huge topic for another class. But basically day trading, someone who would buy Bitcoin when it's down here, sell it when it's up here, rinse and repeat the whole process, and they would probably make a lot of money if they're good at it, right? And then we have a different kind of way of making money in trading. I would call P2p trading, right? This is just someone who is buying and selling cryptocurrencies to make a profit, but they're doing it on a P2p platform. So they're buying Bitcoin from a low price, selling it at a high price. This is basically how peer-to-peer currency traders make money in Kenya. This is why we have so much volume, because there's a lot of money to be made in this space. So if you're an entrepreneur and you're looking to make money in the crypto space, this is probably a place where you can start your journey. So we will look at an example here. We have this guy here called Mose Rich, and he sells for cheaper cash and M-Pesa, etc. Right? So he sells one Ethereum currently at 68,200, right? So if you want to buy from him, this is the rate that you would buy at, correct? And the current price of Ethereum, when we look at it, the current price of Ethereum is about 55,000. When we look at it in dollars, this is $550. This makes it about 55,000 Kenya shilling. He's selling it for 68,000 because there's nowhere else you'll get it cheaper in Kenya. So what they do is they would come to this platform. He would put a buy order. So he would buy your Ethereum for 59,000 from this same platform. This is 3.1% below the market price. And he would come here and sell it at 8.5% above the market price. So if you're an entrepreneur and you're looking to make money, you could also look at this as an options for making money in cryptocurrencies, right? You can basically buy from people who are cashing out and sell to people who are getting into the crypto space. So this is what happens in terms of making money in Kenya. So there's that bit of trading. There's the professional one where you can do day trading. And then there's the peer-to-peer one where you can buy cryptocurrency for the low price and sell it at a bit of a high price. And then we have another form of making money in cryptocurrency called staking. All right, so I think we spoke about mining, and I think everyone has a bit of a good idea or a bit of a grasp of what mining is and how it's done, right? And how making money in mining would look like, right? So this mining of Bitcoin, what we saw in the big warehouse over here, this kind of mining is what we call a proof of stake mine. This concept is called proof of stake. Sorry, proof of work. Here, this is what is called proof of work. By proof of work, we basically mean the miner has to do the work of verifying the transaction. So he has to buy the equipment that does the work for him, doing the complex calculations of the blockchain in order to receive the reward. And then we have something else called proof of stake. So proof of stake is the introduction that we come here with staking. So we have proof of work, that is Bitcoin mining with the equipment, and proof of stake. So proof of stake here, which is under the category of staking in making money with cryptocurrencies, is the process of actively participating in transaction validation, similar to mining on a proof of work blockchain, this one. But on these blockchains, anyone with a minimum required balance of a specific cryptocurrency can validate transactions and earn staking rewards, right? I think there's been a lot of hype about the Ethereum 2.0. So currently, Ethereum is a proof of work blockchain. By proof of work, we mean we have miners like these guys here who come into the system, they buy the equipment, and they set up the equipment to do the mining work in order to earn the rewards. But Ethereum is shifting from a proof of work to a proof of stake, right? And this proof of stake mechanism basically makes it that you do not need all the equipment, right? You don't need all the equipment in order to do the mining. What you need is a minimum required balance of a specific cryptocurrency, which currently is 32 Ether. So when you have 32 Ether, you can basically stake it on the Ethereum blockchain and it can earn you rewards, right? When you stake it, your amounts help to validate transactions on the network. And by validating the transaction, you basically earn some rewards. So if you're also an entrepreneur looking to make money, you could basically, I don't know if I have any sources for, yeah, here we have Ethereum 2.0. Let's just share this. So this is basically a proof of stake. You just need a certain amount of a certain cryptocurrency, stake it into the blockchain, and then get a reward annually, daily, monthly, etc. So here, if you staked 32 Ether, which is worth 1.7 million Kenya shilling, you would basically be able, you can see here, based on the setting in the calculator and the assumption outlined below, the annual interest earned on your stake will be 12.5%. So if you're not getting a similar amount from your bank or from your investment portfolio manager elsewhere, you can decide, hey, this is decentralized, right? This is the next level technology, and I can make money from it rather than it just staying in a bank, right? So each and every year you will get 12.5%. And this is money you will get in a decentralized manner. And this is your money. Like once you put it there, this is your money and you have access to it and you will get it. But this is a new service. It hasn't started yet. So, and you can see here, given the price of Ethereum at 558, the value of your original stake would be worth $20,000 after 1 year and $40,000 after 10 years. So that's the kind of investment you're looking at. If you can see, I will also share this Ethereum calculator and then people can just see for themselves, because here we have the calculation. If you put in 32 Ether, how much you would expect in the first year, the second year, the third year, and you know, all over 10 years, you would get 125%. And this is the amount of reward you're getting per year, $2,250. So, and you could also remember, right? The value of Ethereum keeps going up. So the value of the Ethereum you bought could be 550 right now, but in 5 years, the same 550 could be 5,000. So your investment could easily double or triple the current value it is, right? So that is what staking is. You basically take a certain value of cryptocurrency, a minimum quantity, you put it into a proof of stake system, proof of stake blockchain, and it will help validate transactions and you will earn the rewards to your crypto wallet. So that is what staking is all about. I also have, there's several cryptocurrencies that offer staking. And I also do a bit of staking myself. Like one here, I am hosting it on my own computer. And I can show you also an example, because I like to be very, very practical with what we're doing. That way you can get to understand, right? Like this one is one of my wallets for a project called Divi. It is a proof of stake project, and you can basically validate transactions on the Divi blockchain and earn the rewards. So you can see 2 months ago I put in 100,000 Divi, and on this 100,000 Divi at that time it cost about $3,000, and during that period in 2 months it has basically earned 5,445, right? And that is basically money that is accessible to you at any time. If you want to withdraw it, it's your money. You can basically get out of the system. But basically that is how a proof of stake would work, right? So this is 0 points. This is the current price of Divi. And basically during that time, the 100,000 stake I put in has been earning, you can see here, 495. Every day it earns like something. Every week it earns something. You can even see we have another transaction that came in 15 hours ago of this amount. And so my total amount went from 100,000 initially to now it's 100,000, 105,000. So every month it will always earn something, and I don't have to do anything. I just have to stake it. So that is basically how staking works. And this is the current price of Divi. And so basically it's earned around 5,000 in 11 transactions during this 2 months period. So when you do the math, that's basically around $180. So in 2 months, like that's like 9,000 every month. And when I cash it out, it usually comes to around 10,000 due to the difference in prices. So I didn't have to do anything. I just have to stake it there. I mean, that is similar to just having an M-Pesa shop. So instead of having an M-Pesa shop, you can come to the cryptocurrency space, learn about the different kind of investment options and choose one that suits you. And you can start putting your money to work for you. So you can stake on Ethereum, you can make this kind of rewards. You can stake on Divi, you can stake on so many other better cryptocurrency projects out there that offer something different, right? So you can see Bitcoin doesn't offer staking as it is, but all these other cryptocurrency projects offer staking, right? And it's very, very decentralized, just to give you a bit of an idea, because I host the wallet on my own computer, right? Because here you can see this is my wallet and I host it on my own computer. So you can see when I made the deposit, you can see this is the masternode that is currently running, that is earning the rewards. And you can send transactions from here, you can receive, and I own the private keys to my specific wallet. So I'm basically my own bank in this scenario, right? Right now, I'm not paying any taxes because we do not have any what do we say? We do not have any legal frameworks for paying tax. But as soon as they're set up, I don't have a problem paying tax, right? But so if I can earn something every month from putting my money to work, I would definitely choose to do that in the crypto space or any other space whatsoever. So in the crypto space, that is one of the examples that we see in terms of how to make money with staking. So if anyone has any question about that, they can proceed to type it in the Q&A as we proceed to the next option of making money, which is liquidity mining. So Robert, do you have any questions up to that? Because we've done quite something.
No, we don't have any question except one from Brian, who is asking whether you are rewarded in Ethereum or USD.
Usually you are rewarded in the cryptocurrency in which you staked.
Okay.
Yes, so if you stake Ethereum, you will mostly get rewarded in Ethereum. If you stake Bitcoin, you will get rewarded in Bitcoin. If you stake US dollar, well, right now we don't have any US dollar staking. Can you hear me, Robert?
Yes, thank you.
All right, good. All right, so we can go to the next one, which is liquidity mining. So with this one, we would have to go through it extensively in possibly a future class for those who will be interested. But this is also another field of cryptocurrency that is recently developed, probably just in less than 2 years. And so what we looked at here, let's just read through this first of all. So liquidity mining. So in decentralized exchanges such as Uniswap, users can deposit their tokens and the platform will utilize these deposit assets to provide liquidity to traders interacting with this protocol and return the share of trading fees with them. So let me break this down into 3 options. So the first thing we have is decentralized exchanges, right? So we have decentralized exchanges such as Uniswap. Let me break this down into 3. So these decentralized exchanges like Uniswap, so what we looked at here on Binance, this is basically what we describe as a centralized exchange. It is owned by a private equity entity who is known. So should the government want to shut down Binance, they just go to the CEO, they call him to parliament, and they tell him, hey, we don't like what you're doing, you need to close it down. He will have no option but to close it down, right? But we have other exchanges that are decentralized and they're hosted on the blockchain and they're not owned by any single entity. So if you wanted to shut them down, it would not be possible because we do not have a person who holds all the private keys of that block, of that exchange, right? Right, this exchange, when you deposit money into it, Binance holds the private keys to your wallet. So if they decide to act in bad faith one day and disappear with your money, that is exactly what will happen. They can basically just disappear with your money and it will be a legal tussle to follow up and try to get it back. But we have other decentralized exchanges like Uniswap that basically is hosted on the blockchain and each and every individual have access to their own keys. So here you have access to your own keys. You only interact with the platform, but you hold the keys to your wallet, you hold the power to your money, you hold the access to your money. You can only interact with the platform, but the platform does not hold the private keys to your wallet. So in recent years, there's a new space in cryptocurrency that is happening, and that is called decentralized finance. People who are in banking would simply equate it to something like open finance, right? So basically, the developers in the cryptocurrency space are basically trying to bring what is happening in the banking industry and in Wall Street and in the federal market, in the Fed, which is the body governing money in the US. They're trying to bring all over those policies to cryptocurrencies, right? So this is where exchanges like Uniswap come in. This is basically a decentralized exchange. And as we've seen from the definition here, users can deposit tokens into the platform, and the platform will utilize these deposited assets to provide liquidity to traders, right? So getting liquidity is quite a big problem, right? So in order to solve this problem, decentralized exchange like Uniswap basically decided, oh, so what we're going to do, we're going to provide liquidity. We're going to ask people to provide liquidity to the platform, and then we will share with them the rewards after people trade on the platform, right? So by liquidity, for those who are not traders, liquidity is basically money, right? So anytime you hear liquidity, liquidity just means money, right? It means lots of money. Like you can see the amount, this Uniswap is basically, it's basically like, it's not even a month old, right? Sorry, it's not even 6 months old. I'm not sure. It basically started in June, as you can see here. It started in May this year, so it's barely 1 year old, and it has already attracted liquidity of 1.6 billion, as you can see in this chart. $1.6 billion for something that is less than 1 year, right? So there must be something going on. So maybe you want to learn about something like this, right? Because I'm sure there's other people in the world that don't even know something like this exists. Yet we have 1.6 billion in liquidity being locked here. So what makes such a thing very interesting? So this is, I would basically describe it as if Equity Bank or ABSA decided that whoever is doing business with their bank can come in and deposit funds, and Equity Bank will basically share with you a piece of everyone's transaction fees. So whenever anyone is buying airtime, anyone is sending money, anyone is taking a loan, anyone is doing insurance, whatever fees they would get from that, they would share with you, as long as you have locked up your money with them, right? So this is the same scenario. You would basically come in here, you would lock up your money or your liquidity here, and you would be able to earn liquidity fees. Because what happens is we have different transactions, right? For example, here, if you want to change your token from Ethereum to any of these other tokens, right? Like BNT, like BLT, all these other cryptocurrencies, you would want to change this, right? The platform needs liquidity in order to take your Ethereum and convert it to BAT. So what the platform did is attracted people with Ethereum and people with BAT to stake their tokens into the system. Thereby, anyone who wants to trade Ethereum to BAT will always find the liquidity to trade it from one asset to another. So once that transaction takes place, users are charged a transaction fee. The platform takes a small percentage and shares the rest with the users. So if you locked in your liquidity, you will basically get a small portion of the liquidity pool fees, right? So we can even see here, let's just have a look at this. So here we have Ethereum USDT, and here we have 1 year's fees of liquidity fees. So if you staked your money in this pool of Ethereum USDT pool, you would basically be expecting to get 20% annually in terms of liquidity fees. So whatever liquidity fees pass through the system, if you have your money staked inside there in the liquidity pool, you would basically get 20%. This is wrapped Bitcoin, you would get 5%. This is USDT, Ethereum, you would get 20%. So and it varies. I mean, it changes. It's not very constant. You can see some are even going as high as 58%. We have very different forms of options, but remember, all this is basically still very new, still very experimental. A lot of things could go wrong. So in stuff like this, you just invest cautiously. You don't put your whole portfolio. I mean, we have a lot of money being locked in. You can look at the liquidity here, and this is the #1 trading, and the liquidity here is $141 million, right? So this is a lot of money being put in here. So you can decide out of your portfolio, hey, maybe I just want to see how this thing goes. You can put in just a small percentage and expect to earn this much. So basically, that is what yield farming is. Sorry, that is what liquidity mining is. And liquidity mining is basically the platform offers liquidity to traders, and they share with the people who have locked in their money, trading fees that they earned from the traders. That is basically how I would describe liquidity mining. I don't know if anyone has a question about liquidity mining.
I think we are running out of time. We have about 10 minutes to go.
Oh, all right, no problem. So I think we will just run through this. We are also about to come to the end.
Especially on crypto scamming. This is where we can easily lose money.
Good. All right. So I think I'll just mention yield farming briefly. So I think I've already explained liquidity mining. I've already shown anyone an example here of how they would earn liquidity fees and etc. And we have yield mining and yield farming. If you've ever heard about yield farming in crypto, this is the utilization of crypto assets / tokens to generate governance tokens. Case in point, Uniswap and Harvest Finance. So we have other projects like Harvest Finance, where instead of putting in your money and earning liquidity fees only, You could basically stake your money and earn governance tokens. Governance tokens is like Uniswap. You know, in Uniswap, if you stake your money here, you would basically earn Ethereum, right? But what if you want to earn something else? You want to earn the governance token for this specific platform called Uniswap. This is where liquidity yield farming comes in, and it's a combination of so many trading techniques that basically offer yields. And remember, this is still very new. This is still very experimental. Some of it I'm doing, some of it I would never even touch. Like you can see this one, people who are staking on this protocol, they're staking a token called farm, and they're making an APY of 150%, which is just crazy bonkers, but it is true and it is happening. And people are making that kind of money. And you can see the deposits being made, and you can see the annual profits, and you can see the annual percentage yields. So here, if you would stake your money, instead of earning Ethereum that you staked or Bitcoin that you staked, you would basically earn the governance token for this platform, which is a farm. So basically, that's all about yield farming. We shall tackle that at a later class later on, but that's just to identify the different opportunities of how to make money in cryptocurrencies. Anyone have a question, you can basically start asking now as we go into the next segment here, which is how to spot crypto scams. This one is the most important segment of this whole class, because a lot of people have fallen prey to this, and it is quite sad, especially in the crypto space. All right. So as I've written here, it's something that you've seen before. A site that promises instant returns on your small crypto investment. It looks legitimate with all the happy customer testimonials, FOMO inducing promises, and easy to use dashboard that look like so many other financial sites. The language is open and all. FOMO is basically the fear of missing out. You know, someone sits you at the table and tell you, if you don't get in right now, you're basically gonna miss out. This is something you truly want to avoid, completely want to avoid. Anyone who's coming to you, selling to you, and doesn't tell you about the technology, right? What I want you to give you a pro tip is just to understand that crypto is all about the technology underlying. So if someone is selling something to you and it's a crypto product, tell them to explain how the technology works. Go and do the research yourself to understand how the technology works and how it makes money. That way you can have a better understanding if it's a scam or not, right? But if it's very vague, you don't understand, and then you have to start doing some multi-level marketing or joining someone under you, then you're probably just investing in a scam. I mean, crypto at the end of the day, it is a project, it is a business, it is a technology. So the most important thing you need to know, it is a technology. So if anyone is selling to you any crypto product, start with the technology. If you don't know the technology, no problem. Do not be afraid to ask. I'm here, Robert is here, Abojani is there, the Blockchain Association of Kenya is present. Just shoot them a message on Twitter or ask Robert for one of their contacts. A guy will help you to verify if the technology is legitimate or not. All right, so examples of well-known cryptocurrency scams. We have Ponzi and pyramid schemes. Ponzi scheme is a simple but alarmingly effective scam that lures in new investors with promise of unusual, highly returns. And usually this is the main get-go for them. Look out for projects that encourage you to recruit new investors to enjoy bigger profits. Anything that encourages you to recruit in order to enjoy bigger profits, right? That is definitely a Ponzi scheme, right? Some projects might require you to recruit in order for them to get exposure. They're like, hey, can you refer us to your friends? We're starting out this new project, you know? They're trying to push out the project to the community. They're trying to do marketing, right? These ones will mostly share about their technology. They will not force you to buy in order to make bigger profits, right? They're just doing some marketing to push out their project, to push out their technology, or to look for customers for their project in order for them to start making money. But anything that asks you to recruit new people in order to enjoy bigger profits, you need to be very, very aware of that. All right, so we have impersonation giveaway scams. Oh man, this one is one of the most saddest one, because I personally know people who have lost money in it. And we have one that was you see, there was a hacker, there was like someone who hacked Bill Gates. I think, Robert, you remember that story? They hacked Elon Musk's Twitter account. They hacked who else's account? Bill Gates, right? Robert, I can't hear you clearly. Yes. So things like those you just want to avoid. Anything that doesn't involve explaining how the technology works, you just completely want to avoid this kind of scenario. So always be look away from, always be on the lookout for impersonation, giveaway, scam. Anything that is just given for free in the crypto space, you want to be very, very wary about. We have things that are legitimately given away, like airdrops. But anything else apart from airdrops, you want to be completely wary of it. The scammers will often promise to send you double back once you send them. We have so many of this, and a lot of people have fallen prey to it. It's quite unfortunate. So do not send your crypto to anyone without it being a legitimate reason, because the scammers will promise to send you back double once you send them. That is definitely a scam. It is very rampant on Telegram and Twitter, so you need to watch out for that. Another one we have is fake exchanges and fake wallets. I think this is like someone would create a Binance.com that looks exactly like this, and if you're not careful which link you're clicking on, you could end up clicking the wrong one. It happened to me myself. I lost quite a small amount of money. It was not a problem, but that shows that these are things that can happen, right? Instead of typing Binance.com, maybe you typed Bydance.com. They just changed the N here to a D, and you did not notice. Maybe you're in a hurry to trade, right? And so you need to be careful and vigilant in the crypto space, because remember, you are your own bank. So you need to be fully vigilant, right? And as I will emphasize here once more, a cryptocurrency project is a business like any other. Ask tough questions before investing your hard-earned cash. Also, when in doubt, reach out. That would be the best way to finish this cryptocurrency scams segment, is that a crypto is a business like any other. The same way you guys do evaluations of stock projects, we have different ways of doing evaluations in crypto, right? If you start getting into the crypto industry, there's token metrics, there's looking at the team, there's so many different metrics we can look at to see how a cryptocurrency would fit in to the space that it's trying to go to. So you need to ask all the tough questions before investing your hard-earned cash. And also, when in doubt, kindly reach out. I put a reference link here for how to identify crypto scams. I'll put another one here for what will help you to get a better visual understanding of how these websites might look at. And this is one pro trick that you will basically take from this class, and is that the biggest cryptocurrencies like Bitcoin and Ether have transparency and neutrality acting to the backbone of their technology. Therefore, any crypto project which is unclear about their technology should be avoided, right? Because you are investing money that you earned. So if anyone comes to you and doesn't understand the technology of what they're selling, you need to be very wary of them. They need to be very hands-on. They need to have all the data. They need to have all the documentation if they're telling you about the crypto stuff that you can verify, right? Because the biggest cryptocurrency like Bitcoin and Ethereum, they have this transparency, right? They have this neutrality. So why is your project any different if you're trying to sell it to me, right? I will look at what the best ones are doing, and I will ask you, hey, can you provide me this and this? If you can't provide, then it's probably just going to be a scam, right? So another pro tip, you can verify any crypto project via the Blockchain Association of Kenya. I'm also a member of the Blockchain Association of Kenya. So if you contact anyone there, I will also be available to help you. You can also contact Abojani. There's quite some wonderful people here who understand cryptocurrency. So they will be able to help you avoid cryptocurrency scams. So, and with that, I would like to thank you all for joining today's session on how to explore cryptocurrencies and how they work. Abojani Masterclass. I would call it Bitcoin 101. And thank you for sacrificing your time and being able to join us today for 3 hours. We do not take it for granted here at Abojani. So I want to thank everyone for coming. And should you have any more questions, should you have any comments, please make sure to share them with myself or Robert in the Q&A section, so we can do one more last Q&A in general to get a feel of what you guys have understood. But basically, that's what we came here to learn today. And you can basically give us any comments about how the class was conducted, what you feel we could add on to, what you feel we could subtract. We'll be very thankful for those kind of comments. So Once again, thank you very much for taking the time to join us today.